Then. Hey, morning everyone. So we are still live from Panama. Gabriel sitting here next to me. So let's start the day. Today we're gonna go through price action on AMC, on GME, guys. As every day, we have some big day today coming. We have the 25th of March expiry on GME. The number of options is absolutely massive on this expiry. So we're gonna have a look at that. We're gonna have a look at what it can mean in terms of price action today, but I can already tell you that it can be very wild because of the huge gamma that is here. So we're gonna go through that. I'm gonna explain again what it means, how it works, and what kind of moves we can expect today. So let's start right now with we're gonna start with GME. Let's start with GME, guys. Hey, morning. Okay, I'm gonna check that later, guys. We have 10 minutes left, so I want to do quickly the technical analysis of GME and AMC. So first GME. So yesterday we were trading rather flattish. We ended up the day up 1% despite a small pullback to the 130 area. That was our first support. That was here. Bam. Let me put that in green. Okay. The volume was low, so it's like a little pause in the rally. So like I said, this is totally normal. We always have this kind of small consolidation, small corrections in any healthy move up. So this is pretty good to me, especially that it happened before the 25th of March, which is today, which is a massive expiry day, guys. So I'm gonna go through that very soon. So first 130 support, we came back close to the 140 level, which was our first resistance. It's not a strong resistance because once again, to know if a resistance is strong or not, you need to check how many reactions you had and when it was. The more recent past is the more important. So here, as you can see, we had some reactions, but nothing that massive. Okay, so then what we can expect today is to go test this resistance again. So let me zoom in quickly. Let's go on a shorter time frame. Bam. So let's go on a 30 minutes time frame because we've seen that the 20 period moving average was acting as support. So as you can see here, then we went through it. It didn't act very strongly as resistance, let's be honest, but we still went through it, came back, retested it. So it was acting very well as support, but it didn't act very well as resistance. So right now we don't know if it's still a good moving average to follow, but as you can see, and this is the reason why you always need to have different moving averages on your chart, because sometimes it's the 20, sometimes it's going to be the 50, sometimes the 200. You don't know on which time frame, but that's going to give you reactions. So you need to go from a short time frame to a bigger one. Or to zoom in. It's better actually from a larger time frame than to zoom in and check which moving averages are giving you good reactions. And here we can see that the 50-day moving average is giving us good reactions. So maybe we're gonna set up a trade here around 137. We're gonna see. So the momentum is still bullish, guys, here, definitely. Let's see what is happening today, but the global market is opening up, so that's pretty good. Let's have a look at AMC right now. And yeah, just to conclude, the first resistance we have on GME is 147. I said 140 is rather the pivot point around which we are hovering, but the resistance is created by, you know, the recent highs that we had. So 147, 148, you know, the closing candles that were here on Tuesday, and the real resistance, guys, is at 160. So let's see if we are able to go test it today. This would be amazing, and we would I would be very exciting to see what is going to happen around this resistance. Probably a first rejection, and then we're going to see if we are able to get back to it with some volume. This is what we want to see today. Okay, hey bro, salut Jean. All right, let's do AMC, guys. And then of course you can ask me questions if you want. So AMC daily time frame, same thing a little bit as GME. So this is the situation. We had this this move down that started in November 21, and we were looking for some signal that is saying that this move down is complete. It was pretty hard. We had a lot of fake signals in this whole move down, and this signal we had on Monday is definitely the best one we got for some time, because it involved a much bigger volume than everything else traded in the past 6 months. Okay, so volume is one of the most important indicators, especially when it comes to stocks like AMC or GME, because you guys know that the volume is making is what makes people discuss this. The more people involved, the more we're going to talk about it. The more we talk about it, the more people are going to come to the trade. So this is how it works. So volume is extremely important on those stocks, and here once again it's the biggest volumes we had since August 24th. So then after this strong move, we managed to stay high, which is very good. We don't like to see the price action rejected, you know, after such a strong move. But let's compare this. I have something cool to show you guys. We are wondering if we are ready to squeeze, right? We are wondering if we can go to, I don't know, 100, maybe in a month or in a few weeks, all right? This is the question everybody has. You guys even asking if we can go to 100,000, all right? I don't know, maybe, you know, technically it's possible. It seems a bit too far as a target, but fine. So here, what we can do is we had this kind of event that happened actually not that long ago in May 21, and I'm sure everybody remembers that. This was the closest situation that we had, the situation that is the closest to a squeeze, right? To me, this was a squeeze, at least a gamma squeeze. I'm sure shorts covered here, of course not all of them, because some of them they have just more limits so they can handle a bigger loss, but here everybody was buying, you know, there were natural buyers and there were shorts covering, I think. So we can compare this situation that started in May 21, and I was covering AMC at that time, and you can check my video, guys. I was calling for it, of course, and I pretty much found the levels before they happened, and the targets and the pullback levels. How did I do that? I use Elliott waves combined with Fibonacci. So here the first thing that we can assume, of course every move is different, but we can assume that we're gonna have the same kind of structure if we get the same kind of moves. Why? Because we have the same players that are involved in the trade that are gonna probably trade roughly the same way. So look at that, guys. Okay, I prepared this chart for you. Look at this move up that we had here that started on the 6th of May. What do you see? We see 1, 2, 3, 4, 5 candles going up. Yes, bro, you were there when I gave the targets. Cool, man. I hope you took advantage of this, and I'm gonna try, guys, once again to guide you as good as I can, but everybody knows that it's technically impossible to predict what the market will do, but we have many tools. We have, you know, we have a lot of past information, so we can try to, you know, find some areas where potentially we can have some rejections, and especially structure the move up. And a move up is usually created by 5 waves. And look here, so we have this 5 first candles going up, okay, grounding higher at the beginning, exactly like here, 1, 2, 3, 4, 5. All right, so we have the same beginning of the structure. Then we had a massive move up. Okay, so here we had 6, actually one is hidden here. So this time we have 6 candles going higher, then a massive move up. Here we had 5, then a massive move up. Then it got followed by 3 more candles, 3 more bullish candles. For now we have 1 that is very bullish, so this is for now stronger than that. We are having a small pullback just like here, and let's see if today we make a stronger move or not. Let's see what's gonna happen, but I mean, a scenario close to that is not impossible at all. So this would be a first wave. I'm here giving you guys the bullish case because of course anything can happen, but it's looking very impulsive because of the volume, because of the strong moves that go through some major resistance, and after a long correction involving a lot of volume. So whenever you have this kind of event, you can consider that the move that just happened is the beginning of a longer term move. Okay, so we don't know for sure, but we can assume that. So it's a first wave, all right? So then you put a first wave. Let's see where the first wave can go. But just looking at the past, I think that 22 or 25 is a good target. Then we're gonna have probably a second wave pullback, then a third wave, 4 and 5, okay? So once again, as you guys know, I'm cautious because for now we don't have the signals everywhere that things are coming back on the global market, but we start to have some good news happening on Bitcoin, for example. We have some breakouts happening on Ethereum as well, on a lot of altcoins, etc. I was checking some of them today, but we're gonna go through that again. But we have some things happening here. We have some breakouts happening on different meme stocks as well, on Tilray, on SNDL. We got BBIG, Mullen that we're reaping as well. So we can see that, and the global market is doing good, okay? Not amazingly good, but good enough. So we can see that we are in a situation where things start to be hot again. But after a long time like we had, where we were correcting, you know, bears are, I think, still sitting just above and waiting, you know, for bulls to buy. And, you know, there's gonna be one more fight. It's, for now, there is no capitulation of bears to me. Even if we saw some strong volume traded on green days, which means that bears lost money. But I think they're still, they are not ready to let it go fully. I'm talking roughly about everything, guys, okay? Because the situation is not perfect. We have a lot of reason to think that, especially regarding the global market, that things are not stabilized yet. So, for this reason, I think that we need maybe more time. But let's, even if I think we need more time, let's try to make the more bullish scenario that we can get, okay? So it would be something that developed in 1, 2, 3, 4, 5. So in this situation, where the first wave can go, first we can zoom in even more, because the first wave should be an impulse, so it should develop in 5 waves as well. So I go on an hourly time frame, and as you can see, for now we didn't really consolidate after this first wave. So this is the reason why I believe this is one move up, one first wave, and that is gonna correct a little bit at some point. Okay, so let's try here to make same thing, some Elliott wave counting inside that. So 1, 2, 3, 4, 5. So it's possible that we get something like that, guys. Okay. Once again, I'm doing here the bullish case because today is a big day and I believe something nice can happen. So let's see. Okay, let me put that in minor. All right. Okay, once again, when you start to draw your Elliott waves, it's of course very subjective. There is no good answer, but what is important is to get a very strong move with a lot of volume in the third wave. So I always start from that. And third waves, remember that, guys, they often go through major levels. So here definitely the 16.5 level was the resistance that got broken here, the downward sloping trend line that we had of this whole move down, and it's where the more volume has been traded. So this is a good start for us to think it's a third wave. So if this is the third, here we have 1, 2, quite obvious. And so yesterday was the fourth wave. So I don't know if the fourth wave is complete or not. Fourth wave usually develop in 3 waves. So here it's unclear. Once again, when you start to do some Elliott wave counting on the hourly time frame, guys, you're gonna have a lot of noise. You're gonna have a lot of uncertainty. It's very, you know, it's not an exact science at all, but it just gives some rough indications. Bam, bam, bam. So here ABC. Maybe we are doing an ABC. So let's see. Right now we are pulling back a little bit, 19.8. To me, the support area is still around 18, 19, something like that. So I don't know exactly what's going to happen today, but maybe one more leg down, just a little bit, or maybe it's done already. Once again, it's very hard to do some Elliott wave counting on the short term, but let's see if we're able to get this fifth wave. If we do, it would look very good because it would follow exactly, guys, the theory. The theory is that moves up develop in 5 waves with a massive impulse in the third wave involving a lot of volume. Then we probably gonna start to see some, you know, bearish signals on the short term, something like lower volume on the way up. For now, we had a lower volume on the way down. This is not bearish. This is bullish, guys. This means that the move up is healthy. But if we have this fifth wave, with, for example, a bearish divergence and a lower volume, and we arrive close to the 25 level, this would start to not be easy, but quite clear of what is happening. Probably we're gonna then get rejected, come back to the 22 level, something like this, and here we would very likely have a bullish reaction. So we are not there yet. I'm just making one scenario. Of course, there are other scenarios. This is the bullish case, guys. But let's be honest, things look good for now. So let's see if we're able to reach those levels. We of course today gonna try to set up some trades. This is the purpose, guys, of this live trading, of this lives, where I try also to show you a bit what kind of trades we can do on the short term. Okay, hey Scott, what's up, bro? Hey Gary, how are you guys? Okay, so bam bam bam, what else can we say? I'm trying to find some short-term resistances on AMC as well. For now, bulls, bulls are strong, guys. We can see the price action is for now holding well. I'm trying to think where we can buy some shares, guys, because once again we're gonna try to get in some trades. Yesterday we tried to buy Bitcoin. I had some permission issues. I think it's because I called my broker this morning. It's because my account is based in Hong Kong, and you guys know that China has some issues with the cryptocurrency market. So my order couldn't get placed, but anyway, it wouldn't have been executed. We're gonna go to that soon. I want to stay a little bit on AMC and GME. So like I said, this is the bullish case. Let me zoom out a little bit, guys. Go back on the 4 hours time frame. Okay, this is how it would be looking. So once again, guys, it's very possible that this doesn't happen. I really want to be clear on that. When you do technical analysis in this kind of environment, you can only make some assumption and try to guess how things will happen, but you never know exactly how the market will react, and sometimes you have some moves that are totally unpredictable. All right, so just keep that in mind. But it's still interesting to stick to the theory and see how things could happen if the theory is followed. So this is what could happen if the theory was followed. It's too early, guys, to use some Fibonacci projections, because as you know, Fibonacci projections are very useful to know where the fourth wave will pull back. Once we have 1, 2, 3, all right, then the bottom of the fourth wave is kind of predictable, and the top of the fifth is predictable as well. This is what I've done, guys, back in June 21, when I gave you guys the levels almost perfectly. So I hope I will be able to do that again, guys. So let's see what's gonna happen here. Bam bam bam. We're gonna wait here, same thing as usual, guys. We're gonna wait for some consolidation, some trading pattern to develop for now, or some obvious support. All right, 18.7 is an obvious support, so if we get there, of course we're going to buy some shares. For now, we have here some consolidation forming, as you can see, just below the 20.6 resistance level. And once again, guys, you can see I have this level for a very long time, and surprisingly the price action is contained just below. The issue here is to set up a trade is that we have this, all right, this move that went through this level, got rejected at 22, got back to it. So all of this area makes a breakout above the 20.6 level not a good, I would say, setup to enter. So we're gonna wait here. I don't see anything kind of obvious to do some trades. Let's check GME quickly, guys. Oh, so GME, yeah, you see, I'm talking too much. And here we wanted to set up a trade, we didn't, and it reacted perfectly on the 50-day moving average and 20-day moving average. Let's see if it can get back to it. But this moving average is strong. The price action is doing great. Let me put some shares, guys, here. Now it's moving. Okay, so it's gonna be around 140. I want to make sure. For now, what I don't like, no, there's nothing I don't like. You see, I'm just checking. Whenever you buy on a support area, you don't want to buy when you can see some early bearish signs. Early bearish signs are lower volume on the way up, momentum down on the way up. Here on the way up, it's the only, even here the momentum was going higher, and the volume was higher as well. So you see we don't have anything bearish on GME. So buying here is a good opportunity. So let's say 140. So let me put here just 20 shares. Okay. So you see today the PNL is rather flattish for now. Okay, so we buy 20 shares. $140. Okay, so we place this order. Okay, so first order placed. Unfortunately, guys, as you see, I discussed that just at the beginning, but I was on AMC and GME went quickly here and bounced. So we missed this trade, but guys, it's always like that when you trade, especially day trading. You have many opportunities. Some of them are good, some of them are not good. You're gonna miss some good ones. You're gonna take some bad ones. You're gonna make some money, lose some money. You need to be prepared for all of that. Many things are happening, so you just need to stay focused and take what comes to you and just observe and wait for the price action to give you signals to get in some trades or exit some positions. Try to know who is in control. Here bulls are clearly in control. So what else can we have? Okay, I want to go through hey Patrick, what's up, bro? The first 5 waves, is it close to 30? So in the scenario I did, once again, what we can do here, we can try to predict where the 5th wave would go if we have this 5th wave developing. Why? Because we have already 1, 2, 3, 4, all right? And once again, Fibonacci and Elliott wave is a technique that works better, guys, on the 4 hours and daily time frame. I'm here doing it on the hourly time frame. It can still give good results. So let's check, let's have some fun. Okay, so as you guys remember, I'm sure you know how to get this target. You measure 1 plus 3 applied to the bottom of the 4th, and we get our targets. So the levels are 0.618, 1 to 1, 1 to 1.618. Okay, so here it would be 25, 28, 33. Now, the theory is also saying that whenever the 3rd wave is extended, then usually the 5th wave is smaller. And if you have a 3rd wave that is not that big, then the 5th wave is usually extended. Here, we are rather in the situation where the 3rd wave is extended, right? Because the 3rd wave was absolutely massive. Okay. So in this situation, we usually have a 5th wave that goes to the 0.618, which is 24.6. So this would be a nice target, guys. Okay, if we are able to go to the end, once again, whenever you use Fibs projections to find targets, you need to associate that with some natural resistance levels. A natural resistance level is a level where you had a lot of volume, rejections, support in the past. And here the best I have in this area is 25.5. Okay, so Fibs give you some areas, but the real resistances or supports that you're going to use are created by trend lines. All right, and here it's not very strong, but it's the best I have. So 25.5. So in this scenario, maybe AMC could go to 25.5. This would be the first wave, and then got rejected, which would be totally fine. Once again, we're gonna monitor that. The second wave pullback is very good. It gives the opportunity for buyers to get in the trade. For those who have missed it, it gives the opportunity to, it just gives some air to the move, which is good. Otherwise, like I'm saying, guys, since a few days I'm doing my live sessions, is that if a move up develops without any pullback, any corrections, at some point everybody is going to take profits, bears are going to attack, and it's going to be just a bloodbath. So we don't want that to happen. So we want to see this, small pullbacks, correction, consolidation happening on low volume. Okay, so for now we're pushing higher, we're doing good. Woohoo! GME 150. That's serious. What a pain, we missed that trade. Now it's not gonna get back here. Now you see if it gets back here brutally, it would even, we need to see what's gonna happen here. For now the volume is low, guys, but it's been only 12 minutes. I don't want to see a lower volume than that, and I don't want to see a bearish divergence, but I'm afraid I'm gonna see it. I can already feel it, because look, the volume starts quite low. So for now we have decreasing volume. It's gonna be bigger, of course, because the candle is not finished, and I don't see how the MACD can go higher than that, guys. All right, so I'm already feeling that a bearish divergence is coming, and that we are going higher on lower volume. So guys, here we might see some rejection happening if we reach these levels, and this could be the end of the first wave. So let's check all of that. Okay, we can do a little bit the same kind of countings, guys, here. So 1, 2, 3, 4. Woohoo! So guys, here the third wave is that big that the fifth wave might actually, let's see, guys. Today is a massive day. Maybe we're just gonna go through the 160 level brutally today. It's possible as well. Let's check the gamma, because as you know, we have today is a big expiry day. We had 4.2% of gamma yesterday. Let's check today, guys. GME, bam. Stay with me. I'm gonna do that quickly, guys. I know that this spreadsheet for some of you might be a bit frightening, but trust me, it's very important to keep an eye on all of that. Okay, so I'm retrieving the information from the option market, the data I get from Bloomberg, guys, with my formulas, using my spreadsheets. And this is very important to, you know, monitor the flows, guys. The flows are what helps you to do the market. Okay, so why is it so low? Okay, so first here I have this. That's not good. Bam. Okay, let me try to understand what's happening here. Why is the gamma so low? Ah, maybe it's not pricing. I know why. Because I'm not seeing the gamma coming from the March 25th expiry. Yeah, it's pricing at 0. Alright, so how can I do that? Bam. I need to change the date. Okay, so maturity, I'm gonna try that +1. Let's see if it works. Nah, it's not working. Okay, whatever, guys. I said I'm gonna be quick here, so I'm not gonna fix my spreadsheet now. Okay, I don't see the value of gamma, but I know it's big. We can, but I see everything else. Okay, so here we can see that. Bam. Let's move that in the short squeeze, short list. Bam. Let's compare this value compared to yesterday. So the DTC is stable once again because the volume is bigger. The gamma is not good today because I cannot compute the gamma of today. It's just you know, a formula issue because, well, for whatever. And what we can see is the current synthetic short that is growing from 4 to 5% roughly. Okay. We can check the number of options. Yesterday we had 17.5 million. Today we have 20 million. Look at that, guys. The 200 strike was at 2 million. It's growing. So basically everybody's buying options, okay? So I'm not gonna stay here longer. We can try to compute the max pain is at 130, okay? So not the nice level, but let's see. Let's see, guys. Not that much information from this today. What we know, guys, is that the number of options on the 25th of March expiry is absolutely massive, and you can see it here. You can see that the biggest strike is coming from the 200 strike, which is on this 25th of March maturity here, as you can see. Bam, 1 million shares sitting at the 200 strike. I doubt we can go there, but let's see. Okay, so let's continue to make some assumptions. So on GME, guys, what can happen? What could happen here? we can use fibs, try to predict what levels could be reached for the top of this first wave. Once again, we can expect a pullback to happen at some point. Okay. We can also wonder if this fourth wave, maybe it's the second wave and we are in the third, but I doubt it. Okay, let's first try to find the target for the fifth. Okay, so you see 170, it's possible. So let's see. I think 160 is a very strong resistance level, so I doubt we can really go through it without a real, consolidation that we didn't have for now, guys. As you can see, so we can very well just push higher and squeeze hard. That's possible, but it's not the preferred scenario. Here, for now, what is happening is that we are grounding higher, but without real strength since Wednesday. So let's see if today we're able to have a very strong day. If yes, this would confirm that we developed in 5 waves on the upside. This would confirm that this move is very impulsive, and this would make a second wave pullback a very nice entry opportunity. Okay, guys, so let's wait for that. Let's see what the market can give us here. Yesterday's volume traded was lower, but like I said, this is rather good news to see a low volume trading on the consolidation. Then let's see, guys. My take for now is that this is a first wave and that we're gonna have a second wave pullback. Okay, and this is pretty much the scenario I had for quite some time. This, of course, strong move that happened this week was very, surprised everyone. But what we can expect from here is maybe something like this, guys. This here, a second wave, and then bam, bam, bam. Okay, this would be once again a very bullish scenario. A first wave that comes here, okay, something like that. Then here a second wave, and then the third, 4, 5. Okay, so too early, guys, to talk about target. I'm just giving you the type of structure that we can expect to see. It's also possible that we just go higher, higher, higher. Okay, but we know what happens when when we are in this scenario. Okay, if we just go higher without breathing, at some point we're gonna see some strong rejection. So we prefer to, take our time, just go higher, correct a little bit, use fibs to enter. Here, same thing, guys. We can use Fibonacci ratios to get those pullbacks. Okay, so usually second and fourth waves, they like to correct to the 38.2 if the move is strong, or 61.8% retracement if the correction is deeper. So we can already start to do that a little bit. Okay, so we can check, for example, here, this third wave, look how strong it was, guys. The third wave didn't even correct to the 38.2. So for this very reason, we definitely cannot assume this is a second wave, because there is an alternative counting where you could do something like that. Okay, 1, 2, 3, 4, 5 is complete. Okay, and we completed the second wave and we are doing a massive third wave. I don't think this is happening, because a second wave that is not even going to the 132 to the 38.2 percentage ratio of Fibonacci is unlikely to be a second wave. So it's my guess is rather that it's a very quick and shallow fourth wave that we're doing a fifth. So let's see what this fifth wave can give us. For now, as you guys can see, 9 minutes left. We still have lower volume. This is weak for now compared to what we had before. So if we're not able to make something very strong today, this move would probably enter a small pullback correction. That would be a very nice entry opportunity that could last maybe a couple of days, maybe early next week. We're not there yet, so let's see what the market gives us today first, guys, and then of course we're gonna analyze what's gonna happen next week. But let's see first what happens today. So we have some order placed at 140 on GME. We missed the reaction this morning, guys. On the 20 minutes time frame, once again, the 20 and the 50 period moving averages seem to be acting as support. I now will pay attention more to the 50 because the 20 has been broken and not really acted as resistance on the way up. So this moving average on the 20 minutes time frame, the 20 period, is not anymore the one that traders really pay attention to. So I don't want to pay too much attention to it as well. But here, of course, we had the two of them at the same level. So once again, it's a pain. We didn't set up the trade quick enough, but this is part of the game. Let's check quickly what we have on the rest of the market, guys. And then of course we're gonna come back to Amc Gme. So we're gonna check global market quickly. We're gonna check the VIX, guys. That is giving us very good information. Okay, 7 minutes left. I see the volume growing, so that's good. And Gme is ripping. That's very good as well. Let's stay here a little bit more, guys. Okay, starting to be positive. That's great. Okay, guys, so global market SPY first. So here, as you know, guys, we are neutral plus, so slightly bullish, since we broke out above the 445, 446 level, right? This was where we had the 200-day moving average as well coming here, and we had a little fake out below this level, and bulls took back control quickly. So here it's a bit the same situation, guys. We didn't pull back for quite some time since March 14th, so it's been 10 days that we are just moving strongly higher without breathing. You can see volume is decreasing. The momentum is still going up, so that's good. We don't have any bearish divergence. So for now, we don't have any reason to believe SPY will pull back, okay? And especially we are not close to the resistance that is at 457, 460. So my take, like I'm saying for a couple of days, is that we stay in this range, grind higher on lower volatility, lower volume, then get a little rejection. So this scenario is still valid. This is what is happening for now. So bam, bam, bam. What else can we say here? Yeah, and what is going to be very interesting, guys, if this happens like that, if we get this fourth wave pullback. So of course this would be a very nice area to buy, to set up a trade with the stop loss here, because we are not sure at all that a fifth wave is going to come. But if the fifth wave comes, we are in it, and if it involves huge volume and goes through the 460 level, we're gonna be out of trouble for quite some time. This would give bulls the advantage for the coming month. All right, here for now we have let's say bulls in control for the coming weeks maximum. Okay, to get bulls in control for the coming month, we need more. We need a strong volume going through the 460 level. All right, guys, so this is what we're looking for in the SPY. I could go on a shorter time frame, but let's be honest, we prefer to stay on AMC and GME, guys, that are doing great here. Okay, so what else can we do? Triple Q is pulling back a little bit, but it's strong, guys. It's a little bit the same analysis we have on the SPY. Because do we have a negative beta today? You see, whenever we are in a bull run, having a negative beta is rather good news to me, because it reminds me the good days, guys. The good days were where we were in a strong bull market, and whenever the global market was pulling back, AMC and GP were ripping. Okay, so this is an environment that reminds me good things. So if I see this, you know, patterns or, you know, correlation happening, I would feel more confident in what is happening on AMC and GME. So triple Q, like I said, so here same thing as for SPY, guys. The support area is at 350. Okay, it has not been tested, so let's check here if we have pulled back anything. No, guys, we are just moving strongly higher since we were trading at 320 roughly. So so same thing, guys, we can expect at some point a pullback here. Is it gonna happen now? Let's check if we have some bearish signs of small correction, pullback. Here once again, volume are going lower. Okay, I'm gonna answer the question about max pain very soon. So max pain for what? AMC or GME? And here, as you can see, we didn't pull back at all. Yes, we're looking for some bearish signs, if any. For now, we don't have, because on the daily time frame, the MACD is going higher, the RSI is going higher. Okay, how many calls in the money? I'm gonna check that, guys. I'm gonna check all of that. Okay, on the 4 hours time frame, we have the MACD that is flattening. Okay, but we're still above the this moving average that is acting well as support for the past week. So nothing bearish as well. And we have the VIX, which is interesting, guys, to pay attention to what is happening on the VIX. Look at that, bam. Since I started to make my live updates, we were having a VIX at 23, and I told you guys that the most likely scenario is that we see a VIX coming back to 20 with the global market grounding higher. For now, this is what is happening. I still believe this scenario is the most likely one. So VIX is going lower, so it's good. It means that markets are reassured, are confident. The fear is going a little bit. I didn't see news since yesterday. The only news I found, about the global market, the only news I found is that some banks like Merrill Lynch are giving positive suggestions, positive information about the market. They switch from neutral to bullish on equity for the coming weeks, things like that. So I'm not sure if they're doing some technical analysis like me. It seems more like technical analysis than macroeconomic analysis, because the news are not amazing, guys, let's be honest. So only technical analysis can, I think, tell you that we are bullish for the coming weeks, despite the bad environment in which we are. And then we're gonna see what's gonna happen. Okay, I'm gonna check how many calls in the money. That's a good question, because the number of calls that are in the money. So let's check only on the 25th of March expiry. What's gonna happen is that market makers are short calls, all right? Because retail are buying options. So if a retail investor is in the money on a long call option, it means that an option market maker is short a call option that is in the money. So what's gonna happen at the expiry is that there's gonna be a share delivery. So the retail investor is gonna receive a long position, so let's say 100 shares if he has one option, and the market maker is gonna receive is gonna have a short position of 100 shares. So is there a short selling restriction? Yesterday I had this question. We don't have the short selling. We have it on GME. We don't have it on AMC. From what I'm seeing. So let's see what's gonna happen. But anyway, option market makers are not usually holding, keeping a short position on purpose, all right? They usually cover right away. Hedge funds, it's different, all right? Hedge funds, especially those who are specialized in shorting, their business relies on, shorting companies and keeping their short positions. But option market makers, of course, some of them are keeping some short, but they prefer, I think, to cover quickly. They don't have, I think, big limits about that, because it's not their core business. They're not supposed to keep short positions for a long time. So what would usually happen is that they're gonna cover either by buying shares today at the close or Monday morning. Okay, I'm not exactly sure what makes the most sense. If I was holding a short option that I cannot close, I would buy today. I would buy today at the close so that I'm flat. So they would probably buy today at the close or anytime during the day. So now that I have explained that, for those maybe who were not aware of the mechanics of options, let's check how many options are in the money. So for AMC and GME, you're asking. For AMC, okay. So I'm here on GME, so let's do GME first. Bam. So GME, let's say we close above 150. So we have 14 100,000. So 1.4 million shares, okay? Below 150. 1.4 million shares, and the share float is 60 million. So it's around 2% of the share float, which is not impressive, but it's substantial already, and it can make a difference during the day. Now let's check AMC. And of course, if we go higher, this is what we call the gamma squeeze, because if we go higher, it's not 1 million shares, it's 5 million shares, all right? 4.6. Let's check AMC, and I'm gonna give you Max Payne as well. I would like to buy some options on AMC. Okay, we're gonna check that. I think today is a better day to buy options than on Tuesday, because the volatility is cheaper. Okay. All right. So on AMC, same thing. 25th of March. How many options in the money? So let's say AMC is at 20. Okay, if we go above 22, for example, we have 7 million shares. Okay, 70,000 option, which is times 100, 7 million shares that are in the money if we close above 22. So 7 million shares compared to the share float, same thing, is around 1.5%. And in terms of volume trading, 7 million shares. What was the volume trading yesterday on AMC? Because it's roughly the number of shares that market makers would need to buy during the day. So it's interesting to compare it to the total volume trading during the day, because it gives a good information about, is it going to be easy for them to buy it without disturbing the market or not. Yesterday we had 68 million shares, guys. So it's 10% of the total volume trading yesterday. So of course it has a substantial impact. So we can assume they're going to buy during the day. Okay, but we can also assume, basically have two different ways to see it, because for some options, I don't think they buy shares against it, which means they sell the option and they just hope the option will not finish in the money, all right, and they cash in the premium. But for the shares, the strikes that are closer to the money, the 21 strike, the 22 strike, they usually buy shares against that. Okay, so we cannot assume they just have this short position and hope for the best. They probably already have bought shares. This is the gamma, guys, and the higher we get, the more shares they need to buy. So when I say the 7 million shares need to be bought, it's assuming they didn't buy any yet, but it's not the case. I believe they bought at least half of it, at least, and maybe even more. Sometimes they even anticipate a strong move on the upside by even hedging, over hedging, and when they hedge they need to buy shares. So sometimes option market makers, they keep a long position to protect the short call positions. All right, so we don't know if those shares have been bought already, if they need to buy it soon. We just know that either they bought it or they're gonna buy it, and so they keep this pressure, and the higher we go, the more shares they need to buy. So this is the reasoning that can be made here. It's ripping again, guys. Pam pam pam. We're getting close to the 160 level. So let's see if we see some okay, so you see the volume first thing. Okay, that's pretty good, guys. Okay, I told you that we need to check the volume and see if the volume trading is bigger than what we had before. So it's smaller than this one, definitely, but it's bigger than the one we had yesterday. So it's starting well, guys. All right, yesterday was a low volume day. Today is not going to be a low volume day. It's a part of the volume trading on the 23rd of March, the biggest volume since a very, very long time, happening on a strong move up, guys. So everybody bought today in this move up, so it's pretty good. Let's see what can happen. Let's see if we can grab some shares, guys, at some level. Okay, and I had a question about AMC options. So bam, let me check that. AMC versus GME, which has higher potential. Okay, I can discuss that. We can also check what is if GME is still trading at a premium today, I remind you guys that I took some levels where we had a lot of volume, and I considered that these prices were equivalence prices, that were fair prices. Where did I put that? Here. Okay, so I remind you, for example, 130 on GME is equivalent to 21 on AMC, because we had a lot of volume that was exchanged there in the recent month. So we can consider that whenever GME is at 130, AMC should be at 21. So if I use this ratios, okay, bam. So right now GME is trading at a 15% premium compared to AMC. So if you need to buy, I mean, not financial advice, but just looking at that information, it's better today to get some AMC shares that are cheaper compared to GME, okay? Which doesn't mean that GME cannot go higher, of course, but it means that at some point there's going to probably be a catch-up of AMC. So, and a catch-up of 15%, all right, guys? So this is the first thing. Good morning from Chile. Hey, brother. Then some option strategies about AMC, guys. So let's have a look at that right now. Once again, like I said, the volatility is lower today because whenever we have that strong moves up like we had here, then market makers are scared and they put the volatility very high. The higher the volatility, the more expensive are your options. And whenever we have a pause, a correction, a pullback, then the volatility is cheaper. So right now, I think the volatility is cheaper because we didn't move strongly yesterday, and for now we don't have a plus 10%, we have plus 3%. So option market makers are, I think, still kind of relaxed for now. So let's have a look at what kind of options. So yesterday we were discussing the April 25th strike. So first let's make some scenarios, because if you guys, I think that April is good. So we're going to discuss an option strategy on April and an option strategy on June, okay? If you do April, like we saw, guys, April is going to expire on the 14th of April, so it's here, right? So in this situation, you want your option to be in the money if, once again, this is a bullish case, guys. So in the good scenario, we are at 25. Of course, we can close at 30, but let's assume we're going to close at 25, which is already quite bullish. You want your option to be in the money. So you want your strike to be below 25. So you want to maximize your profits at 25. So I think that going to some April 22 strike is appropriate. Let's see how much this is costing, guys. Okay, so it costs $2 roughly. So the volatility for now is still 138%. So I think I'm live on the volatility. So it's not lower for now. It's still expensive, guys. So just be aware that you pay quite a lot for this volatility. The fair price of that, like I showed you yesterday, it should be 100. So your options, instead of being $2.3, should be 1.7. Just keep that in mind, guys. Option market makers are charging a premium for now on AMC. On the April maturity, so that's why it's better to buy shares, sell options. All right, this is only my view. I'm an option trader, and in this situation, it's better to have the same position as option market makers, who are professionals who optimize their profits. And those guys, like I said, they sell options to retail and they buy shares. So it's good to do the same as they do. Okay, but we are not option market makers, so so we can still buy options if you guys really want that. So I think that the 22 strike on April maturity is good, once again, because it's gonna give, let's check the real price of that. Okay. Okay. So April, the 22 strike is not here. Let's add it. Okay. You see, so like I said, 2.3 is around 2.3. Okay, $2.30, and what you can expect using this strategy, if AMC closes at 25, you invested $200 today, and you're gonna make so 100 times the difference between 25 and 22, so $3,000, is it? No, sorry, it's $300. $300, so it's not amazing profits. This, once again, because the volatility is extremely expensive. So guys, I would not do that. Let's be honest. It's better to buy shares, all right, and sell options. Once again, I know you don't want to sell call options, but this is the best strategy to have for now, as the first wave, well, as we didn't have the second wave pullback, so we can expect it to happen. So it's better to buy shares and to sell the April 25th call, for example, all right, and cash in some premiums. To do covered calls is the best strategy to me today, as the volatility is very expensive and we didn't pull back yet after the first wave. So I'm giving you an example. You have 100 shares, okay, and every 100 shares you sell, for example, some April 25. So how much is it worth today? Okay, so we saw that with buying the 100, buying the 22 strike, you can make $300 of profits if we close at 25. Okay, and by doing that, by buying 100 shares and selling one call, you can make at 25 $1,000 US, but so 3 times more. All right, but of course you have more risk because you start to lose money below. So the option you're gonna sell it 1.5, so you start to lose money below 19, and you can have a bigger loss. So it's totally a different risk that you take. You can buy some puts even if you want to capture risk, but we said that buying volatility is not making sense today. So let's go to other maturities, because I think that what you guys are looking for is some options that can really give you nice profits if we squeeze. So let's do rather this scenario. So I don't think April maturity is the right maturity to find to buy for this kind of scenario. I think it's better to go to the June maturity, for example, because we are kind of sure that everything will be done. And then the best timing, let's discuss about timing first. The best timing is during the second wave pullback, okay? And I'm gonna be here, guys, to buy options myself during the second wave pullback. For now, I don't think it's the best time because the volatility is high and the time is playing against us, as you know, whenever we buy options. So the best thing is to wait as long as possible so that the options value is decreasing, okay? And to do it whenever everything is calm, okay? When you have strong moves up, once again, we saw that option market makers are charging a premium of around 50 cents, guys, even 60 cents by option. Like, they make your option 30% more expensive than what it should be. So this is just, you know, a scam organized by option market makers. But once again, they need to provide liquidity, so they have no choice. They need to show a bid and an offer, and every offer they show, investors are going to buy it. So of course they're just, you know, moving up this this bid offer that they need to show. So it's totally, I would say, understandable that the volatility they use for pricing is higher than the volatility they should use. It's kind of expected that they charge a premium because they need to do that to protect themselves. Otherwise they're exposed to a massive risk if things go wild on the upside. So, and once again, they move the offer price, but they move the bid price as well. So you can as well sell this volatility like they do at a premium. So this is, once again, I think the right trades to do in this kind of environment. But whatever, we were discussing what kind of options we can buy to take advantage of a potential squeeze. Okay, so potential squeeze would look like that, guys. Okay. Don't pay attention to more targets. Once again, it's too early. We need to have at least the first wave complete and the second wave to start to discuss about the third wave targets. For now, we're not there yet. But we can already assume that, just looking at that, the second wave pullback could happen around April. All right, around mid-April, in 2-3 weeks, okay? So in 2-3 weeks, I think this would be the right time to buy options. So you can buy some today if you want, not financial advice, but I'm just saying that keep some cash maybe to buy more options in mid-April, because I think that there's going to be a nice opportunity mid-April. So this is for the timing, and once again, because the volatility is going to be cheaper if we have this kind of pullback like we had here. Okay, maybe it's going to be quicker, I don't know. Here the pullback lasts 5 days, so we didn't complete the first wave, but maybe it's going to happen next week, I don't know, but let's see. The thing is that whenever it happens, the volatility is cheaper and call options are cheaper. So then if it happens, what options are good to buy? So like I said, guys, it's not good to go to very out of the money options, because the volatility used to price them is even higher. So I think that going to, you know, a 30 strike on June is good. Okay, the 30 strike I think is one of the best strikes we can have. So it's still 140% strike. So you see the price, now let's consider we buy it. The price, so you see the volatility first is more fair, is only 125 on this strike compared to 100 realized volatility. So we can see there is only 25% premium. So let's imagine, so this costs 2.5. Let's imagine they price it fair. If they priced it fair, it wouldn't cost 2.5, it would cost 1.5, guys. So you see, you are losing basically 40% of your investment just because option market makers are scared of what could happen. All right, so take this into account as well. Then maybe I'm a bit overestimating the fair price, but at least they charge you 50 cents more. All right, but whatever, it's the price, and it can still make a lot of money if things go wild. So let's imagine we buy one share. And once again, I'm very sure that if we have a second wave pullback, the volatility would be not 125, but maybe 105 or 110. So this option would be much lower, plus the time would be passing. So you can get this option, I'm very sure, half of the price it is now, even before things get wild. So let's monitor that. Right now, this option costs $2.6. Okay, let's check exactly the real price, because here I'm using some Black-Scholes formula approximations. So we said 30 strike. Okay, so you see the price is 2.2 to 2.5. So I'm having a good estimation of this. So this strike is good to buy once again, but I would not buy too many today because I think you can get it at half the price. So maybe using this strike and averaging down. Okay, so maybe getting some at 2.3, adding more at 2, adding more at 1.7, adding more at 1.4. You know, doing 4 clips, not financial advice. Each time, you know, a little bit more. So maybe 1 at 2.5, 1 at 2, and then you make 2 at 1.7 and 3 at 1.4, something like this. You know, you take each time a little bit more, and so it's 10 options, so it's a lot of money. So I'm sure maybe this is too much, but it's just an example. This is what I would be doing, for example, if I wanted to load this strike. But once again, I personally won't be buying options today. I think the volatility is too high. I would wait. Okay. Thank you, brother. Thank you. I appreciate that you guys enjoy this information, but yeah, I'm trying to give you the best content possible. And once again, you know, I'm coming from this industry, so I know a little bit how things work, which doesn't mean that it's, you know, easy to make money every day, but whenever you know some things, it just helps to, you know, avoid some obvious traps that happen, obvious scams. You know, I lost my MACD. Okay, the MACD is back. So let's see a little bit what is happening. So GME is still doing great. You see, we had this 147 resistance this morning, and as you can see, we went through it and we pulled back right on it. So we didn't set up a trade here, because whenever a resistance is broken but you don't have a nice consolidation before, it is not a strong support. So 147 acted as support a bit by luck, but it was not a strong support. So we're still waiting for more information if we want to set up some trades. Let's see. All right, then AMC, what is it doing, guys? Let's check on the hourly time frame. Okay, same thing, guys. We went through the 20.6 level and it acted as as support. 20.62 has been hit, and then we had a bullish reaction. So once again, for now, I didn't buy shares today. We bought some shares on Tuesday at 18.7. For now, you know, I'm waiting because we could very well have a massive move up today, but we could very well have just, you know, average move up and then bears starting to take back control. So I'm more focused on this. So this is a false. I'm more focused on the second wave pullback. So I want to see a nice, the perfect scenario would be to see a nice fifth wave to the 25 area. If we see that, it means that things are kind of respecting Elliott wave theory, respecting Fib ratios. So it's gonna make this move easier to analyze for the future, and it's gonna make sure that, not sure, but you know, more likely that the second wave pullback is gonna be bought, because if we have 5 waves that are very clear on the upside, I mean, this is bullish, right? If we don't know if it's 3 or 5, let's say we don't make a new high. Here I can count 5 waves if I want. Sorry, my mouth is not more working. Okay, here if I want, I can find 5 waves. All right, once again, Elliott waves is subjective. So look, I can very well do that and say, oh look, I have 5 waves, but you're gonna tell me, yeah, but your fifth wave is very small. All right, so you see, the thing is that it would not be clear. If we do this fifth wave to the 25 area, no one can tell me that I don't have 5 waves. I mean, it's very obvious that I have 5 waves up, and everybody sees it. Bears know it. Bears would have lost money between 22 and 25. So, you know, a fifth wave on the up, 5 waves developing on the upside is not only something that is, you know, followed by guys that know about Elliott wave theory. Elliott wave theory is based on what was happening before, you know, Elliott arrived. So it's, you know, just interpreting what kind of emotions, memories investors have. And I can tell you that a fifth wave is a huge defeat for bears, okay? Because, you know, they just try to push the price action lower, and if they here get defeated with high volume, then there will be buyers as well on the second wave. You know what I mean? So this fifth wave is what is creating the thought process of bears to be like, all right, I don't want to find myself in this situation anymore. I will not keep a short position. I will buy it back. Okay, so this is why the fifth wave is very useful for you know, predicting a new move up to start. For now, once again, we only have 3 waves up to me. I don't count 5 waves here. We have something very impulsive already with huge volume, so it looks very much like a third wave. But for now, we don't have the fifth. We don't have a new high above 22, and on GME we did a new high. So we are in a situation that I was a little bit fearing. We are making a new high, but without momentum. Look at the MACD, very low on the 30 minutes time frame. I can switch. So for now, this is, you know, this is not bullish. This is rather suggesting that we're gonna have, maybe we're gonna ground higher to the 160 level, but I doubt we just destroy it if we don't see some momentum coming. Okay, so, and of course, if the momentum is coming, it's gonna be too late. So basically, I can only here wait for the price action to tell me what is more likely to happen later. For now, I have no clue. We can very well have a massive move up to the 160, 170 area today. We can very well get rejected now. Right now, we have, to me, a little bit of bearish signals, because as you can see, we made a new high. And whenever you make a new high, usually bulls should be, all right, we're doing it again. And this is what we felt. You know, we were saying GME is ripping. but no one was buying, all right? So this is the reason why, and bears were selling. There were probably some profit taking as well. So for now, this is what is creating a bearish divergence, is when bulls make a new high, but are not able to take the momentum with them and on higher volume, all right? So for now, we have a bearish divergence that appeared on the one hour time frame. We have this bearish divergence on the 20 minutes time frame. Let's check the 4 hours time frame. We don't have the bearish divergence on the 4 hours time frame. So it means whenever you have some divergences on shorter time frame only, it doesn't give you good information for, I would say, I don't know, you can roughly multiply the time frame by 10. This is just a rule of thumb, but the 4 hours time frame gives you information for roughly the week to come. And so for the week to come, for now we don't have a bearish divergence, but on the 30 minutes and the 1 hour time frame we have it. But every move up often starts with a bearish divergence, and then the bearish divergence disappears if bulls are able to really create some momentum. So maybe we're not gonna have it in 30 minutes or 1 hour, but for now we have it. And this bearish divergence might, usually as the bullish momentum is still strong, I think the most likely scenario, even if this bearish divergence stays, is that we ground a little bit higher, you know, on low volume. And basically what I'm using here is the fact that whenever something big happens, the move we had this morning is big, it always takes some time before, you know, before being forgotten. And bears remember that, and bears maybe are not selling right now. They're afraid a little bit, but in a couple of hours, or even, you know, a couple of 30 minutes candles, so still a couple of hours, but they would feel like bulls are not that strong anymore. So if we stay here in this area for the coming 2 hours, just like, you know, hovering around 152, 153, this could be the end of the first wave. So I wish we could go higher, because for now this fifth wave is very weak. It's still a fifth wave, but it's not really giving us higher levels. So let's check what kind of fib ratios we have for that. You see it's very weak, 38.2% for a fifth wave. It's still a fifth wave, but if we have this kind of fifth wave, I don't know. It means that the second wave would just pull back lower. It's still bullish, even if we're not able to make new highs today. It's still bullish, but it would signal probably that next week is going to be, at least at the beginning of the week, a little bit more calm, with some consolidation on low volume. Nothing bad, just like we had during this fourth wave. Maybe something a little bit longer, maybe like an ABC, you know. This ABC was not very clear. The second wave ABC would maybe look a little bit like that. Okay, we can already make some scenarios, guys. We can assume this fifth wave won't go much higher, you know. I'm just, you know, building some scenarios, and then we're gonna see. Let's say we go to 160 today. Then usually second waves pull back, go to the 38.2 or 61.8. So 61.8 for second wave. I mean, it's a little bit deep. So let's say 38.2, which is the 130 level. So I think that this scenario is very likely to happen. Okay, that we see again the 130 level next week, and that this would be a very nice opportunity to buy, especially that now, you remember yesterday I was telling you, yeah, but the 130 level is not an obvious support because we didn't have any short-term clean reactions around it. Right now we had it, okay? We had it, and it's not 130.7, so let's adjust it. As you guys know, for those who are following my videos for some time, whenever you have a support level, a trend line, support or resistance, that you got using previous highs, like for example those I had here, and the price action is giving you new information on the shorter term, you need to trust the shorter term information. So here we adjust the trend line, okay, and bam. So I match 1, 2, 3 short reactions. I don't match anymore this, but I don't care, okay? And so right now the new support is 127. Bam, Gme going higher. So you see we have a nice fight here. let's see what we would need to see once again. Ideally something that, you know, is going to 170. This would be really perfect. It would meet the FIB ratio. It would be the best case scenario. So let's see if we're able to do that today. It's a bit far, but you know, we're already up 8% on the day. Massive option expiry, everybody knows that. So everybody's bullish. Okay, so VIX still dropping, guys. Coming soon close to the support levels. Let's see what can happen here. Oil is, yesterday we saw that, guys. We keep an eye on the oil price because, as you know, guys, it's very related to the Fed policy regarding inflation, because oil prices is like the raw material of raw materials. All right, you need oil to produce anything. So if oil price is more expensive, other raw materials are going to be more expensive, like metals that need oil to be produced, and it's going to ultimately impact the whole, you know, chain of goods, and it's going to of course create inflation. So, and you guys know that the Fed is trying to tackle inflation right now for the past 6 months, even for the past year, but especially since the war has started. And so if we see the oil price going higher, it makes them in a more difficult situation. So an oil price that is stabilizing below 115 is rather good for the markets. Okay, we don't want to see crazy moves happening here on the upside. I'm afraid they could happen though, just technically. So that's why I'm still very cautious about the global market. I'm still having a short position on triple Q that I'm going to increase around 370. Okay, but of course I'm having long positions on many stocks, so just some protection. Look, GME coming back again here to the 156 level, guys. We're making new highs. So let's see if bulls manage to take the MACD with them, take the RSI. Okay, we have a mixed day. Okay, on meme stocks, here is my Discord, and you know, I keep an eye on a few stocks here that attract interest, and I like to just have a quick glance at that. And if I see it's all green, I know meme stocks are doing good. And here I see some green and some red. So some of them are dumped, some of them are pushing higher. Crypto is bullish. Okay, oil down. So today is a mixed day, as you can see. Nasdaq little bit down, S&P little bit up, gas up, oil down, crypto up. Meme stocks are mixed. I mean, GME and AMC are of course pushing higher, but you know, to me it's, yes, on Tuesday it was not like that. Remember, guys, everything was green. So we can already see that, you know, it's not exactly as strong as it was before. So the bulls are still in control, but you know, not as much as they used to be at the beginning of the week. So it's not bearish, of course, but it's just one information that we can keep in mind. Okay, so here, as you can see, for now we are in this scenario hovering around the 155 level. Okay, and hit that like button. Exactly, guys, come on, give me some love. All right, so VIX dropping like a stone, guys, of course, because the global market is not moving. So of course the volatility is dropping. This is good for the market. Okay, what else can we look at? Let's have a look at Bitcoin, guys. Okay, I'm gonna check at your stocks very soon, guys. So Nile, okay, I keep it in mind. Bam, bam, bam. I did Nile yesterday. Maybe you were not here anymore, brother. I will do it again. Okay, let's have a look at Bitcoin quickly, guys. We don't need to go through all the cryptocurrencies, but I told you we have some breakouts happening on, you know, some altcoins. And I'm keeping an eye on Bitcoin because this is going to give us the direction of the rest of the crypto market. And you guys know what we're looking for. I can say it again, but we're looking for breakout with volume. So just like here a little bit, okay, you remember that it was in July 21. I was in quarantine, guys, in my hotel in Hong Kong, and I remember I was covering Bitcoin at that time, and I posted many videos saying, guys, it's coming back, it's starting again, because we had a breakout with low volume at the beginning, and then the volume arrived when we made a new high. Okay, around 40, it was 40,000 at that time. We got first rejected, so we are a little bit in the same situation. Look, Bitcoin, by the way, did it happen together with AMC? No, AMC happened before, but whatever, you know, we have like many good information coming from the crypto market. So like I said, we have this downward sloping trend line that got broken yesterday, guys. We tried to buy some BITO shares here, but I didn't have permissions, and anyway, we didn't see the pullback yet. But whenever you have a breakout without volume, guys, expect a pullback. A pullback will very likely happen, okay? And we're gonna be there to buy it if we see some volume. So the first high, recent high, is here, okay? So this is the immediate resistance, 45,780, okay, guys? So we can expect Bitcoin to go there and get rejected just like it did here, guys. Remember, the past is giving us precious information, we need to use it. And here, guys, it looks like a move that is just one way up, but actually when you look at it closer, you can see that during this move we went up, 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 and then here, look at this tail of the 26th of July 2021, we went higher, and here the volume arrived, okay? Bam! We went through this level, got rejected, got back here the next day, guys. So here, you know, it looks small, but those are serious moves, guys. We are talking about a 12% move up that got rejected. So this was the signal that things are hot. So for now, we're not having that because we don't have any 12% move up and we don't have any volume. And from here, I doubt we can make a 12% move up. If we do, we would go to 50,000. So maybe this is what's gonna happen. I don't know. This would be a good signal, okay? So if we only go to 46,000, it would be weak. I can still buy the retest, but there is a risk. Now if we go to 50,000 with a strong move up, then get rejected, come back to 45, 46, this would be a level to buy. But for now, we're not having that. Once again, we don't have volume. So guys, technical analysis is very precious, but if you don't have the volume, it means that it didn't involve many investors. It means that most of investors didn't say what they think about this market. So it just makes your signals not relevant the same. So, so yeah, that's pretty much it. I can see the likes going higher. Come on, guys. Hit that like button if you haven't done it yet. It's good for the channel. So what else do we have, guys? So yeah, so my view on Bitcoin is that we keep grinding higher. We have the first resistance at 45,700 roughly. Then maybe a pullback. I don't know. I want to see if we have volume. For now, it isn't clear to me. It's looking good, but I don't have any strong view for now. My view is that maybe something is going to happen if the volume comes. For now, the volume is not here. VIX below 21, guys. We're getting close to the levels where we might expect volatility to kick back again. So we need to be prepared for that. You see, I don't like to see that, guys. This is what we call grounding higher. GME is right now grounding higher, okay? So usually this precedes a small pullback, okay? I'm just saying. So let's see if we have that. When would you buy more shares in AMC? So like I said, for now I don't have any. I mean, I think that right now the risk to buy now, as we saw, GME is giving first signs of you know, potential reversal. We did 1 2 3 4 5. So here what we can play is the fifth wave on AMC, but it can also be weak, and let's be honest, nobody will take profits at 22 or 23. So if you buy here right now, you can find yourself in a situation, if you buy shares, it's fine, because I don't think we can go really below 20 if we make this move. Then the level to buy would be 18, 20. So this is the area to buy. For now, I mean, it's not clear enough. Depending on how high the first wave goes, the second wave pullback would be a good buying opportunity. But to know where the second wave pullback could go, we need to know how high the first wave goes. If we have a first wave that is maybe complete, then the second wave pullback could be lower than that. So today, we don't know. Okay, the second wave pullback, if this first wave is complete, I don't know, I'm just taking one scenario, we could very well see a second wave pullback that is coming back to the 61.8% retracement of Fibonacci. So it would be 16.5, it would be the breakout level. So this is possible as well. So buying at 20 right now in terms of risk reward, I mean, for little, why not? But I would not build a massive position here. If we get back to 16.5, of course, it would be a very nice opportunity, but I doubt this happens. So for now, I'm waiting to see, you know, I need to have more information. You know, we have here now the 20.6 level that is acting as support, but once again, buying here, if you use a stop loss just below at 20, it makes sense. So we could do that, but once again, guys, I don't really like to use stop losses on AMC and GME. It's not the kind of stocks where you want to be doing that, and it's not like, you know, it's not, I think, what you guys want to see. So I prefer to just load more shares when I see good levels. And so here, once again, it's a bit risky to load more here because we can very well go lower next week. It's possible, guys, even if unlikely. And here, I think that, you know, even if we go to 25, then it would be much easier to find some targets for entry on the second wave. So stop spamming. What do you mean? Brandon Sisk, who is that? What are you talking about, man? Intel, what is this? Okay, we can have a look at Intel. Okay, so Nile, Tilray. Okay, I had Tilray. We had indeed some nice moves happening, guys. So let's have a look at that. Okay, Nile was asked first. So did I go through all the global market information? Yeah, so we did Bitcoin, we did SPY, we did Amc Gme. Of course, we're gonna do that again, guys. So Tilray, let's have a look. We had some strong move happening yesterday. Tilray is pretty much in a nice situation because we have this downtrend and we have a consolidation that is here happening, that happened on low volume. Okay, so this consolidation is not perfect because it is still going lower. We prefer to have a consolidation that is, you know, moving sideways than dropping, but it's still giving us nice reactions, and it's still enough to see the Bollinger Band tighter. So whenever we have that, and we have a breakout that is closing above the Bollinger Upper Band, this is usually attracting a lot of traders if this breakout happens on volume. And this is what happens here. So today we have a continuation of this move. For now, bears a little bit in control. Here, the thing is that maybe, I mean, you can see that it's the first time we're really trying to take back control. Usually after such strong moves down, it takes a little back. It takes a little time to okay, I got you, Brandon. Cool. So who is, okay, so Upstart, right? So this is the spamming, I guess, but whatever. Okay, cool. So Tilray, once again, I think that for now it's a bit early to really you know, turn bullish on the long term. We have the 200-day moving average here that is coming at 10.6. So this might act as resistance if we get back to it. So for now, once again, there is still 3 nice points to make. I think that buying here is of course too late. That's why trading is not easy, guys, because you know, to be at the right time on the to be at the right level on the right time is not that easy here. I think that we have some nice consolidation that can be used, you know, around the 6 level. So if we see the price action coming back to 6, this could be a nice entry level until Ray. Once again, I think that taking profits early is appropriate in this stock because it's the first time that we see really bulls trying to take back control. And once again, after long down trends like that, bears are not letting it go right away. So we can expect maybe you know, more sideways move before really moving higher. So let's see. But once again, if AMC and GME start to really, you know, squeeze, it will of course attract other stocks like Tilray, Sendiel, you know. Okay. X as well, guys, moving higher. I'm following this stock for quite some time because it has a huge short interest, and we had a massive breakout, guys. So I'm showing you that, but it's unfortunately a bit late to get in for those who are not in yet. But this is the kind of situation, just I'm showing you that so that you keep that in mind. You know, you have a long downtrend with a nice consolidation here, what I call a nice build up, and then you have a breakout with some volume. Okay, so this is what happened here. And whenever you have that, usually you have a nice continuation on the upside. And here there is, I think, 25% of short interest on X, which is a steel company, so you know, producing steel, so raw materials, commodities. So this sector is of course booming. So yeah, I think we go to 45, 47 here. I'm not taking profits yet. I'm in this trade. Okay, so I can have a look at Nile. Okay, bam, bam, bam. Okay, so I checked that yesterday already. Okay. Okay, so as you can see, we have here this trend line. Okay, it's the best I can do for now. It's not perfect because we don't have that many reactions in the very recent past, but here we have one rejection, consolidating just below, coming back and testing it. The setup is not perfect because here we have a resistance clearly that is created at the 105 level, roughly. Okay, maybe 1 level. Okay, so it's not easy to trade this because then we have another resistance coming a little bit higher, but the volume is nice. Once again, I don't like to see this big red bars on the way up. Okay, it means that bears won the day, won the battle on that day, and it was on a huge volume. So some bulls, a lot of bulls actually lost money here because they bought and it ended up lower. So I mean, it's looking like something is up, but this could very well be a pump and dump. Okay, for now we don't have anything sustainable. We don't have any very good signals. We have resistances just above. So let's see what can happen here. Let's see what can happen. For now, you know, you cannot make any Elliott wave counting here, of course. I would say that if we close above 105, most likely the bullish momentum would continue. I'm coming back in 2 minutes, guys. Alright guys, I'm back. So what else do we have? Okay, please look at Intel. Okay, I'm gonna have a look at that. So night is done. And what is Upstart? Upstart is not. Can you check 9? Okay. Okay, so Udi is actually and Udi bro from the Discord. Of course, I'm gonna answer your question. I have some $12 absolute puts from last week as protection. When is it the best time to sell them? I think right now is the best time to sell them because your put options right now have some value because of the volatility, and if we see a pullback happening even next week, I think that they are likely to, the volatility will drop, and the time makes them cheaper. So I think that it's better to dump them as quickly as possible, those 12th of April, because even if we have a pullback, okay, the only case it would be worth more is if you have a pullback early next week to the 16 area, but even then the volatility would decrease because the volatility is increasing on the upside. So if we have a pullback coming early next week, the volatility would probably decrease and they would lose value because of time and volatility, but they would be more expensive because we are closer to the 12 level. But most likely they would not be very much more expensive, and if we just move sideways they will just converge towards zero quickly. Right now, how much do they worth? So April, you said 12 put, yeah, they're not worth a lot. They are 10 cents. I don't think you can get a much better price. You can, I would dump half right now and keep the other half just in case we have a brutal move down early next week, which I doubt would happen. Okay, I'm gonna have a look at Intel. If people say if GME remain above 150, there will be option that buying 3 million shares. Okay, so I can check that quickly and then we check Intel, but like I explained on GME, so let's check how many options. Okay, but first the thing is that you cannot consider that option market makers didn't buy any shares yet. Okay, they will not keep a full short position on the short call positions. They have probably already hedged some of the position by buying shares, but let's assume, so 3 million shares, yeah, but definitely that's the size I see. But first, it's not 3 million, okay, it's 1.5 million. To go to 3 million, you need to go to the 200 strike. Okay, so first I disagree with the 3 million value. Once again, if we go to the, okay, let's say 160, you are at 1.7 million shares. And once again, of course, they're going to need to buy this 1.7 million shares, but in this case, they would also need to sell the shares that have bought against that position that is expiring, or that they bought already before. So we don't know how many shares they bought already, but in the best case scenario, they didn't buy any, and they're gonna need to buy indeed 1.7 million shares. Now we can assume that it's rather gonna be half of that because they probably have hedged at least half of this. So I would say maybe around 1 million shares to be bought today, and it's maybe not at the expiry, it's during the day. So right now, for example, GME is pushing higher, maybe because some option market makers are actually, buying. All right. So let's see. For now, we're still, that's interesting because we have a higher volume traded the next hour of trading today. So that's good. That's good, guys. That's good to see. That's good news. MACD still lower, but I doubt we can really have a higher MACD. But this is rather telling me that there is definitely a buying pressure today. We already had, you know, almost more shares exchanged today than what we had on Wednesday when we did plus 30%. Yeah, 23rd of March, yeah, Wednesday. So it's looking good. It's looking good, definitely. Okay, you see we're moving higher and the volume is increasing. Okay. AMC as well doing good. Okay, so what else you guys want to see? I can have a look at the ones you asking me often. So we had, you know, Mullen and BBIG, those two get dumped. Yesterday we saw that, so I told you that we had some support at 280. I was hesitating to take a position here, and I said that I won't be taking this position because of the short-term bearish signals I was seeing. Okay, you remember we were seeing lower volume, lower momentum. Okay, so this was already some early bearish signs that we had. So this is the reason why we didn't take any position here, and now we are here, you know, correcting a little bit, pulling back, nothing too bad. But this, I mean, this doesn't look so strong to me because the consolidation is not clear enough. We don't know exactly where the bulls, where the bears. Bulls are to me around 150, so it's, you know, maybe we can find something a bit higher, so 190 maybe. Okay, on Mullen. So, and still weaker volume, just the interest is going from Mullen to GME AMC, guys. This is what is happening today. This is what happened the past few days. So yeah, that's pretty much it. Okay, so I'm gonna answer your question. I saw that. Let's quickly look at BBIG. And BBIG, like I said, guys, pretty boring what is happening here because you know, we had this breakout that is not very clear and we are consolidating just above. So it's rather good that we consolidate high once again in a move. It shows that bulls keep pressure, but if the volume is not coming back, this pressure is eventually you know, fades and bears take back control. We are here, I remind you guys, we are here in a downtrend. Okay, so bears, if nothing happens, it's playing for the bears. Okay, whenever you're in a bull trend, if you move sideways, it's bullish because it means bears are not able to, you know, push back the price action lower. The same thing can be said whenever we are in a downtrend and we start to move sideways. It's not good. Okay, in a downtrend we need to move up on high volume, all right, to show the bears what is happening. So what signs are you looking for to confirm the wave has been completed on GME and AMC and that we'll see a pullback? So I discussed that a little bit at the beginning of the video, but I'm very happy to discuss this again because it is indeed very interesting. So we have three different things we can pay attention to. First, to know even four. So the basic things is that you can use some Elliott wave counting, but once again on the hourly time frame, it's not giving very good reactions, very good, I mean, information. I mean, it's good information, but it's not easy to make those waves really clearly, and sometimes you have some countings that are not respecting the theory very well, but it's still one information that you can use. And if you see that you have 5 waves that respect Fib ratios. So once again, the Fib ratios, you guys know, are, you know, the golden number ratio. So you measure, for example, the third wave, 1 plus 3, sorry, and you apply it to the bottom of the fourth. So here, for example, if we go to 170, I would very likely think that this fifth wave might be complete. So you can use Elliott wave associated with Fib ratios to find some targets. Then you can check if you are coming close to some resistances level that can also signal that you know, this is a bear camp, so that it can give you some information about the fact that the rejection is more likely to happen because you know that bears are located there. So this is another thing, but this is more static information, I would say. And to really read the price action, you need to go to the dynamic information. So the dynamic information is the information about the indicators that are moving with time. All right, so we have a few indicators we can use. We can use the volume, we can use the volatility, and we can use the momentum. So the momentum can be read with MACD or RSI, for example, and we are then looking for some kind of divergences. So if we see the price action making new highs once again with a decreasing momentum, this is, I mean, decreasing momentum and decreasing volume, this is showing weakness in the move up. Here we have mixed signal because we have momentum that is decreasing, which is fair enough because the momentum was extremely strong here. So, you know, having a momentum that is high but less high is not that bearish, but it's still creating a bearish divergence. Now, if you have a bearish divergence with increasing volume, which we see right now, then you don't know because you have mixed signals. So if you have a bearish divergence with decreasing volume, then you know that bulls are weak. Here they don't look weak, okay? They're just not as strong as they used to be on Wednesday, but come on, Wednesday we did 30% up. So it's hard to be that strong every day, right? So it's not, so we have, so okay, this is another method you can look at. So volume, volatility, and momentum. Then you can add the Bollinger Bands without giving information about the volatility. And whenever they are tight, it means that a reversal is likely to happen, okay? It's of course not enough, but whenever they are wide and you have high volume trading, you can assume that even if a pullback happens, it's gonna be bought. Whenever they get tight, then you can assume that maybe a reversal is on the way. So for now, as you can see, so depending on which time frame you're looking, this is another thing that is important, is to select properly the time frame, and it would take me too long to explain everything here. If you're interested, guys, of course, you know there is my course on my website, so do not hesitate, guys, to subscribe to that. You're gonna learn an incredible amount of information. You know, I put everything I know in there, but during my videos I cannot explain everything as good as I did in the course, which is really, you know, step by step, so that, you know, everybody understands what is the whole point of this kind of analysis. But here, so yeah, I think I answered the question. I hope it was clear enough. Thank you, brother. So BBBY, we can check that, keeping an eye on, of course, on AMC and GME that are moving high today. GME is about to make a new high, guys. Bam, it did. So we are coming, guys, to the major resistance area, 160. So let's see what's gonna happen here. We can very well go through it brutally, guys, because if bulls are strong and they manage to, you know, just go through all the selling orders, then we would arrive in an area where panic on the bear side will start. They're gonna start to panic. They're gonna start to be like, okay, we need to take the loss and buy now. Okay, so this is the kind of things that can happen if we go through the 160 level. So let's monitor that. I'm keeping an eye on this, of course. 165 on GME, yeah, that makes sense because this is the 200-day moving average. I totally agree. We can see we have a confluence of resistances that is coming here. We have the 160 level, that is, I mean, the natural resistance created by the last consolidation. We have the 200-day moving average at 165. And we have this trend line that is not very precise, okay, but this trend line is, you know, just connecting the highs. I'm not matching perfectly. I can do it with the log scale, I can do it with the regular scale. It's not giving me very precise signal, but we have this trend line coming somewhere here, okay. By the way, the reaction we're gonna have today here, if there is a rejection, is gonna help us to place this trend line well, so that we can use it for later if we're not able to go through it at the first time. So let's see that as well. Okay, I'm gonna have a look at BBBY right now. Okay, and if you enjoy this content, guys, push the like button, hit the like button. Okay, BBBY. Okay, BBBY. So like I said, I discussed that yesterday. I mean, I know that, you know, I have many questions about that. I know that, you know, we had some bullish action, price action happening here, but once again, we got sold off massively here. So look at that. I mean, this is noisy. This is not a clean chart. We have those big volume trading, sometimes on the red day, sometimes on the green day. And it happens once and then it vanishes. Okay, so we know that we can have this interest coming, but we know that it's hard to have a sustainable rally on this stock. I mean, at least for now. Maybe things are going to change, but for now, this is the situation. The situation is that sometimes we move higher, sometimes we move lower. There is nothing really clear. To me, the price action is a bit disorganized. Let me go on the weekly time frame. Maybe I'm going to see cleaner. On the weekly time frame, I prefer the chart. It's cleaner. I see better the reactions. And I would say that right now there is nothing easy to make on this stock. You know, even on the weekly time frame, I can see the big day, the big volume is happen on a red day. I checked Nile already. I can check it again if you wish, but I've done that already before. You can have a look. Okay, it's interesting, guys. We have this negative beta at play right now. PAM, Nasdaq losing 70 bips. SPY flattish, but maybe soon negative, and GME AMC ripping. So this is what we like to see, guys, because this reminds us once again what happened a long time ago, guys, when we had this strong moves up, this, you know, squeeze situation. Okay, here we go. S&P negative. All right, Nasdaq keeping dropping. Okay, and GME plus 10%, AMC plus 5%. All right, this is looking quite good to me, guys. All right, so let me finish on BBUI. Okay, so once again, I can give you a view here, but let's be honest, my view wouldn't be strong. Okay, we can try to make some Elliott wave counting here. Okay, on the very long term. So 1, 2. Once again, the third wave is the strongest one. So 1, 2, 3, 4, 5. Okay. Then here we have some kind of correction, and I'm not sure this correction is complete. So A, B, C, probably something like that. Okay, so if this is the case, once again, this is an assumption, guys. I don't have enough signals here to really be sure of that, but this is possible. Once again, during those corrections, we like to see lower volume. I don't like to see this big volume happening here, especially in a red day. Bam, so what levels would we need to take back? Okay, I will tell you. So this could be the bullish case. Okay, so I'm not saying this is happening, of course, guys. I'm just giving you one scenario. And once again, we would need to wait for a clear first wave that could maybe go to the 30 level, and then, you know, some consolidation, either some consolidation before breakout here. Once again, the consolidation is what is helping you to know where are located the bulls, where are located the bears, and this is what is very helpful to know whenever a breakout is going to be followed by a strong move. So we're looking for those consolidations. Here we don't have any, you know, the price action just moving up, moving down, big volume, big volatility, but nothing organized. But let's say we have that. Here we could make a play. And then if we just go right through this level, go to the 40 area, and then pull back to the 28 level, this also would be a nice opportunity to buy. So right now there's nothing to do. We can only monitor that, but I would personally not put my money in this for now. Okay. What happens to Nasdaq? So you analyze GME already? Yes, bro, I did. You can check at the beginning of the live. Each time I start with GME and AMC, and then of course I get back to it many times. But yeah, I'm gonna keep analyzing AMC and GME for sure. Okay. I like what is happening, guys. I like to see this negative beta at play. I don't know what is Nasdaq doing, guys, but low volume, just consolidating. It's not a big move. Yesterday we moved up 2%, guys, so this is just a small, you know, correction, consolidation. So let's see what's gonna happen. Bam, bam, bam. What else we have, guys? VIX starting to move up. So we went to 20.9. We didn't even touch the 20 level. I think we're gonna go lower. I think things are not at all starting to go to look crazy. Okay, so what was I saying? Nile, please. Okay. Oh, right, bro, but I did it. I can do it again. Nile, to me, first thing, look at that. You see red. Do you see more green or more red? You see red, right? So I mean, it's just the first impression. It's not enough to really build a view, but I mean, bears are winning every day. All right, that is what is happening. It doesn't mean we don't move higher. It just means that during the day, bears are stronger. That, you know, investors are buying less than they sell. Okay, so this is not, you know, showing any strong bullish momentum. All right. By the way, the RSI is still below 50. Okay, simple rule: RSI above 50 is bullish, RSI below 50 is bearish. All right, and here you can see we are contained below 50 since October 21. So if you see, so we need to combine different indicators. I'm not sure exactly what is your question about Nile, but I can tell you when I would personally be, you know, start to turn bullish on the stock. First, when things will look green and not red. Second, so I mean, investors are winning days. All right, you don't need to make plus 10%, even a plus 2%, but we close higher than we open is a bull victory. So we need to see that, so that, you know, bulls are in the right mindset. Don't forget, guys, that those who make the market, the volume exchanged is not the volume traded by investors who hold their shares. All right, most of the volume traded is by investors that buy and sell. And if they are making more money by selling during the day than buying, this is what they would do. All right, so if you want them to, you know, help the price action to go higher by, you know, and even the algorithm, everything, you need to, you know, you need to have victories of bulls, so that this is the mode that is making the more money for those guys. And this is what they're going to do. They're going to buy if it makes more money for them. They're going to sell if it makes more money for them. So, you know, this is what you need to pay attention to when you arrive on the market. Is it bullish or is it bearish? All right, and here it's bearish. Okay, this is all I can say. Now we can try to see where we have some resistance areas. And once again, we use trend lines, logarithmic scale, regular scale, and we try to see what is fitting the best. And here on a logarithmic scale, I have some reactions here, and we can see that the trend line that is right now around 0.9 is creating the resistance line. So first we need to close above that level, ideally an increasing volume, but we already have increasing volume on the red day. So that's why even if now we have that, the signal wouldn't be good to use. So I would personally not get in. So on my side, to really turn bullish, I would need to see first a few green days, not only one, okay, a few green days, so it's going to take some time, and a stabilization above this level, above the 105 area, so that the RSI would probably finally get back above 50 and hold there. All right, and once we have that for a couple of days or maybe weeks, then we need to find some consolidation and use it to enter. All right, this is what I would personally do on this stock. And then if it just, you know, rips without me, fine. There are other opportunities. I don't care. Okay. Oh, right. So what else we have? We can check. Okay, so CEI. Okay, Scott. Let's check CEI. So CEI. Yeah, so CEI is like related to the energy sector. We had some nice moves happening here before. I think we have a lot of short interest in there, so let's check quickly that. Okay, so CEI, I'm retrieving the option market, I'm retrieving the short position, and I'm trying to, you know, first understand who is doing what on the stock. Okay, bam, 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 coming. All right, so like I said, we have some short, 12% of regular short, 2% of synthetic short, and a lot of volume, so the DTC is low. So, okay, we have some short, but they are not under pressure at all. So this information is not that relevant. Do we have gamma? Gamma is 0.0% compared to the volume traded, so same. There's not going to be gamma squeeze, there's not going to be a short squeeze here, at least not for now. Now we can have natural buyers that just make the price action going much higher. This is very possible. This is, by the way, the usual way a stock is moving higher, right? It's usually it's usually buyers buying shares that create strong moves up rather than shorts covering, right? Because whenever you have shorts, usually it means that we drop. All right, so let's try to understand in terms of technicals what could create some bullish sentiment back in the stock, because clearly we are bearish. Okay, I'm here on a daily time frame. Okay, let's first do the weekly time frame because this move down is very long. Okay, so on the weekly time frame, I'm trying to find the trend and trying to find what trend line is giving me the best reaction. It's not easy. Maybe we have broken out above, maybe not, because once again we don't have any clear consolidation, so it's hard to really know if on the weekly time frame we are above this trend line. But what we know is that on the weekly time frame the RSI has never traded above 50. Okay, it happened once and it got very quickly rejected. So bulls have never been in control in the long term. First information. So if we manage to have a positive an RSI above 50, it would be the first information that things start to go better. But seriously, I doubt this happens because bears are very strong here. So what we are looking for is maybe more a pump and then a dump. Okay, so to analyze that, we go on a shorter term. We go on a shorter term and we try to do the same thing. Okay, so first we can look at MACD RSI. So here, okay, definitely there is a battle for the past year. RSI sometimes above 50, then holding a couple of weeks, month, then below 50, then again, so just ups and downs. Okay, now let's try to find some information about where are the resistance levels and what levels can tell us that bears are retreating or things like that. So we have this trend line, but let me get rid of it. I don't like it. It's not precise. It's polluting the analysis I'm doing on the daily time frame, so I don't need to see it. Here we have a clear trend that got broken in Feb. All right, got broken after low volume. What we're looking for is some reversal signs. Reversal signs arrive first whenever you have balance between bulls and bears, and then you need to have some signal that is saying that a camp is taking the lead here, and this balance occurs usually on low volume. So this is a nice environment for a reversal to happen. Then we have here a first information, big volume. Okay, big volume, but then strong red day, so not very clear, and then starting again. Okay, so here we have a lot of volatility, a lot of instability. What we can say is, like, despite this strong red day, we had bulls that were gathered, looks like they were around this trend line, and bam, they pushed the price action higher. All right, so what can we expect from here? Once again, we can see things are not clear because big day, big green day, big victory. The next day the volume is even bigger, so this is a pump and dump. Okay, so we are in the situation where it pumps, it dumps. Okay, so can another pump arrive? Because this is, I think, the question you're having. So of course it can. It's, as you can see, very hard to buy it on the way up because things are moving very quickly and then they dump very quickly as well. So I think that this stock is good to buy on the way down, okay, whenever the volume is low, like now. But you need to be prepared that it just grounds lower, because once again we are in an environment where we move quickly higher and then slowly lower, quickly higher, so we can very well move slowly lower. So here, if you believe in the stock, which is once again about energy, you know, Camber Energy. Let's check exactly what they do. But I think the best strategy is just to average down in this situation. We can have a look at options. Okay. Camber Energy operates as an energy company. The company exploits, develops, and produces crude oil and natural gas. All right, so that's pretty good. Okay, I don't understand why they must have not a very good management. I mean, the company is probably not doing so well because the price is below 1. So I'm always, you know, a bit careful with any stock that are trading below, you know, 2, 3. It's hard to get back from there. This is what I'm seeing. Whenever you enter this area, it's like, you know, bears will usually not let it go above. So resistance are 4. So first, once again, here the type of strategy that can be used is just to buy on the way down. So let's try to find some support levels. So once again, a support can be created by any trend line. I did TLRA. You can check in the past, bro. If you don't have enough information, I can do it again. So here, let's try to find some moving averages. So the 50-day moving average seems to be acting as support. At least it acted on March 15th as support. Here a little bit as resistance. It's not perfect. You see, you don't have anything very clean on a stock like that is moving that strong. It's not easy to find good levels. So I would say just roughly the 0.7 level is a support. Next support 0.5. So just averaging down between 0.7 0.5 is a good strategy. You know, the 20-day moving average was acting as support. It seems that it's tested today. The level doesn't seem so bad. The question is, can bulls push higher again? I think they can, okay, but I don't have any clear signal that bulls are gonna take back control. We have an RSI above 50 on the daily time frame, so we can assume that, you know, they're gonna keep control a little bit longer. In the past, usually 26th of August, they were keeping control for a few months. So this is another information we can use. We can see that usually the bullish cycles last rather a month or two than a week or two. So it's been only 2 weeks, so we can expect maybe the end of March to be bullish as well. So, you know, this is the type of things I can say about CI. All right, what else? Okay, market dropping a little bit, triple Q minus 1%, SPY minus 0.3, AMC still doing good. We like it. Okay, let me have a look at, so Nile I did, CI I did. Andrew, can you look at COS? Yes, brother from Korea, if I remember well. Let me have a look at that and hit that like button, guys. 80 likes, we can do better than that. Okay, so COS. I don't know, it's not the type of stocks that I'm really a big fan of. Okay, so what can we have here? So first, weekly time frame. Okay, so this was what a move. Plus 1,800%. Okay, so this was part of, you know, the big rally we had on the meme stocks in Jan. Okay, memes on GME mostly, but it didn't squeeze in June afterwards. It went slightly higher and now it's getting dumped. Okay, the stock is worth 8, so it's not like really a penny stock. I mean, the market cap, let's check the market cap. I guess it's not amazingly big, but let's check if I have some information about the short interest. Okay, one sec, guys. Bam. Okay, so Mark. Okay, no options. No options and a very small short. It's and the market cap is 77 million. That's small. Let me check that. So CAS. Okay, let's check the market cap. Gabriel coming back from the swimming pool, guys. I'm gonna be there as well very soon. Enjoy a little bit the sun in Panama. So market cap 77 million. Yeah, that's correct. So CAS Corporation designs, manufactures and sells stereo headphones. All right, audio, video, loudspeakers and related accessory products. The company sells its product worldwide under the CAS brand name. Okay, got it. They're not making money. Oh, they're making some money, but they have a price earning ratio at 400. All right, so I think this is a promising company that can, you know, do very well, but in the same time they are facing many challenges, so they can, you know, very well have a hard time. And I guess this is all about that. You know, it's a meme stock, typical. So small market cap, so it's easy to make it move. If, you know, people start to talk about it on social medias, I guess we can have some nice moves. So let's check if we have some early signs of reversal here. So first on the weekly time frame, as you can see, we had, this is the reason why I always have my moving averages, because the first thing I see is that the 200 week moving average acted very well as support recently. Then we had a move up, rejected on the 20-week moving average. Okay, I'm just taking information for now. Bam, bam, bam. Then what we're looking for as usual. So then we can check, I'm still on the weekly time frame. We can check the volume, so very low volume and suddenly a big volume this week. So growing interest into the stock. All right, but a big volume is good, but it's not enough for a reversal to happen if you don't have a breakout together with it. And for good breakout to happen, you need to have a nice consolidation and, you know, to see clearly where are the bulls, where are the bears. So what else do we have? So yeah, we have a nice volume trading here. It's pretty interesting what I'm seeing, because I can already see the trend line drawing, and okay. So for now, I'm just doing this trend line, so you can see no breakout of the last downtrend I have on the daily time frame. No breakout, right? And you can even see that the rejection that happened here probably happened because of traders using this trend line. Okay, so first we know that this trend line is followed, so we can keep it and it's going to be useful for the future. Then let's try to understand why we had this big volume here. So let's check first. I guess there was a news, right? 22nd of March. Oh no, it was just related to the moves on AMC and GME. Let's check. So this is CE, so I'm checking CAS. Okay, let's check if we have some news about that. Benzigas daily brief on Trinidad, GameStop, CAS, Tesla. Okay, no, okay, it's just because I think CAS is discussed on social medias like Reddit, you know, YouTube, everything, Discord, and you know, there is just an interest of investors in the stock, but I don't see any news related to the companies, which I would have preferred to see, let's be honest, because it's, you know, more sustainable to have a rally based on some fundamental information rather than based on a pump, right? So for now, this is a pump. There is no other word to qualify this move, and we are having a dump. The question is, can we have another pump? And yes, I think we can. We have a quite nice support that is created by this trend line that created the strong move up. Okay, once again, you can see 5-7 reactions here too. So this consolidation is not very nice, but it's still a small consolidation indicating that this trend line is followed, and then a strong move above this trend line. So right now we have some support created at the 7.8 level. Okay. So let's see what we do here. Okay, so maybe we can set up a trade on that. I'm hesitating. Once again, I want to show you, you know, I only take trades when I see there is really a potential that the risk reward is good. Here is not too bad because we have the consolidation. We have big days happening on big volume days happening on a green day, so bulls won the day, and then a pullback on low volume. But here it would be anticipating a breakout, because as you can see we didn't have a breakout. So I prefer to trade once I have the breakout and to buy the retest. Here I'm having early signs of a breakout to come, so it's not enough for now to me to set up a trade here. If I had to, maybe I will do it, but maybe not, because once again it's not perfect and I prefer to show you guys what is good to do. If I had to, I would be a buyer just above this level around 8.10, and I would stop loss just below this consolidation. That's why you need to have those consolidation before breakout, because you know that you have buyers there, so you can just use a stop loss just below this consolidation. All right, so buy 8.10, stop loss 7. It's tempting to put an order here. I can put a small size. I can, you know, risk just $100 here, just for fun. The reason why, okay, but I will wait a little bit. The reason why I could set up a trade here is just because this red day here, minus 9%, happened on very low volume, very low volume. So it means that buyers didn't sell, not a lot. All of buyers who bought here, they didn't take profits, and we can have more buyers getting in. Then we can also see that the volume has still some room. We've seen much bigger volume trading before. This stock has a history. It starts to get popular maybe on Reddit, I don't know, on social medias. Let's have a look afterwards on GME and AMC that are a bit pulling back. This is not bad, don't worry guys, but this is a bit the scenario we were fearing today, is that bulls don't manage to really push higher with the momentum. Let's see, the day is not over. I'm just coming back here quickly to check if we don't want to make an order here. But right now it's hard to buy, okay? Even my order at 140, I think I will cancel it because we have a clear bearish divergence that is appearing on GME, and you know, we went close to the 160 level, so somehow I think that, you know, bulls managed to almost complete what they were targeting, which was the 160 level. We almost reached it, so you know, I don't see any strong motivation right now from bulls to, you know, what is the next target to me, like on the short term. To me it was 160, it was almost reached. So the only thing we could do in GME is to, you know, buy 150, sell 160, but is it really what we are trying to do? No. We're trying maybe to load shares at a better price and, you know, get this massive third wave that could happen. So it would be happening later, maybe at lower levels. So once again, for just the day, buying at 150 could be down here, because we can see this is acting as support right now. 148 is the level. It has been touched, you know, right now, guys. But let's but once again, here for now, I see a little bit downside risk coming for next week, so I prefer for now to just leave things as they are. I will seize an opportunity if I see really a good one, but once again, for now I'm happy with my current position, and what I'm really targeting is this second wave pullback to load some call options at a good price, maybe load more shares. We're gonna see if the volatility is still high or not. Like you've seen, guys, we are keeping an eye on this AMC volatility, so around 125, 140, depending on the strike, the maturity. Let's check GME quickly, so at least, you know, we have some levels that we remember. Okay, because when I used to work, you know, in banking, I was having a lot of spreadsheets when I was recording all of that, and I could just go and, you know, check that, but it really takes a lot of time. So here I'm just gonna do it sometimes, and 200%. I am too distracted. Okay, roughly the same levels, guys. You see 120 on GME. So this is the volatility price. So let's see if we have a second wave pullback, if we can buy some options at 110 volatility, which would be much better. So this is what we're trying to do, guys. We, once again, today, I don't want to rush, you know, I don't see any obvious trade to do. This is not a good level to me to increase the position for now, unless we take profits early, but once again, it's not really the purpose of what is happening here. We could do that on other stocks, guys, so we're gonna have fun maybe, you know, day trading other stocks, but for now, day trading AMC and GME today is not the best thing to do to me, unless we take, you know, short position around 160, but it's not what I'm gonna do for sure. We are not here for that. So bam, 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 let's get back to costs. So I was saying here, yeah, why not setting up a bullish trade? This could make sense. Once again, so I'm analyzing a little bit more. Today we are dumping. You see RSI that could, once again, you can see, guys, this RSI 50 level is often acting as support and resistance on the RSI itself. I mean, not really before June, but after June, here resistance, here resistance. It's not perfect, but maybe here it's gonna act as support. It's another information that we can keep in mind. Okay, you see here RSI very strong, then coming back here and then acting as support. Tu vas faire quoi? Tu vas le jeter?
Non, tu le veux?
Pas tout de suite, mais si tu le manges pas, je le mangerai plus tard.
Ah, je vais le manger.
Ah bah mange-le. Merci. Ok. So here we have the 20-day moving average as well coming here. Okay. I'm keeping an eye on this. It's not the best setup I've seen for now. I mean, we can do better than that. Let's wait a bit. Let's not rush. Okay. Bitcoin is slightly pulling back. Okay. So what else you guys want to see? Let me know. Okay, so see, it's done. Cost is done. Holding my 150 call for June like it's gold. Yeah, I think the 150 strike, yeah, but definitely it's a good strike. I guess you bought it with a good timing, bro. So very good position indeed. Your strike is low, which is good. Once again, don't go to this very out of the money options. You know, they are not good. The volatility is higher. The decay, like theta, is high as well. It's better to sell those options, to buy shares, sell those very out of the money options that trade at stupid prices. Okay, what do you think about PayPal chart? I had seen heavy bullish premium flow in for April. PayPal, yeah, it dropped like a stone, bro. Let's see what they are doing now. Okay, so a little sign of recovery after this massive move down, guys. Okay, I'll be back in 2 minutes, guys.
T'es sûr, hein?
De quoi?
T'es sûr t'en veux pas, hein?
Ouais, vas-y, vas-y. Bah, allez, j'en goûte un peu. Si tu peux me couper un quart de ça. On va quand même goûter ce qu'elle a préparé. La petite.
Ouais, vas-y, ça.
Vas-y, bah, tu peux me le foutre dessus, je vais le prendre à la main. Voilà. Excellent. Alright, guys. So PayPal, we are in a very interesting situation because we have a stock that is definitely a very strong stock. Okay, You don't need to be good in technical analysis to see that. I mean, the rally was just amazing since 2015. Okay, I don't have data before that. I'm not sure they got listed here, but whatever. So here, right now we're having a massive correction, pullback, call it whatever you want. Look at the red day here, the biggest volume ever. So I'm gonna have a look at the news. I'm not sure exactly what created that, but the first thing I do is I measure the whole move up and I apply fib ratios. Okay, then I'm gonna check quickly the news. What happened back then? Is there a very big news related to PayPal? I think there was a news. So what day was it? On the 31st of Jan. Let me check the exact day. I'm gonna find that news quickly. 2nd of Feb. Okay. Okay, so there we go. I have here all the news about PayPal, guys. That's the beauty of Bloomberg. A bit expensive though, but 2nd of Feb. Okay, so we have time. Can I filter that? Okay. Okay, it was here. I saw it. I went too fast. Okay. Okay, so quarterly results. Sorry guys, I'll scroll down too quickly. It's a bit locked. But I saw the news. It was quarterly results. That were
par date, hein.
Ici.
Custom date.
Feb. Okay. So this is the news. PayPal plunges 22% at the open after payment growth slowed. Okay. So it's really a news related to the company fundamentals. So I don't have more information here. I could look for it, but okay, we just know that there is something really related to the core business of the company that created this move down. So it's not just a pullback, it is really a change of, I would say, you know, even long-term you know, business structure. So we can still use technical analysis, of course, but we need to be aware that after this news, the levels we had here that we're not taking into account this news are not going to be reached again unless we have another news that cancels this one. Okay, it's some basic things, but it's important to remind you that. So that's why I checked if there was a news really related to the company or not. If not, then there is no reason we don't get back there. Okay, if we dropped for technical reasons, we're gonna go up there for technical reasons as well. But when we drop because of the fundamental news, unless we have once again a news that is canceling it, you know, even if it's different, we are not likely to go back there. So we can still do some TM and try to find where are the support levels and resistance levels. The first thing what I can tell you guys is that whenever you drop below the 61.8% retracement level, you cannot consider we are still bullish. Okay, you need to just be aware of the fact that now we might just have a downtrend. Okay, a correction deeper than 61.8% is not only a pullback, is really the beginning of something, especially involving that big volumes. So my first overall analysis in here is that there is no reason to think a strong pullback will happen. Okay, first, then we can still try to see where are the resistance levels and the support levels. So I had here already a support at 75. I had another one at 95. I'm not sure I had this one before it was touched or not. because here we had some highs. Probably I put it after it was touched, because otherwise I would have used this low. But right now I need to put it here. So the support levels are 95, 70.5. Are we out of trouble? Is this move complete? I mean, maybe, but maybe not. So usually, once again, a correction develops in 3 waves. An impulse, which is the beginning of something, develops in 5 waves. So let's try to count the waves here. So I don't know if this is a 1. You know, I rather see something like that, guys. Okay, I rather see something like that, just because third waves are the ones involving the most volume. So it looks like a third wave. Then let's check if the fourth wave pullback is respecting some ratios. Okay, it's very weak, so maybe we're gonna push higher to the 130 level, but I doubt we really go above that level. Okay, here we have some resistances created by this recent high. So here, the only strategy I would recommend, not financial advice, but is to buy the dip first, not buy high, because every move that is going to be a bit too high is going to be sold off, guys, in this type of market. So buying here seems even high to me. If we get back to 95, it's a nice opportunity, and keep some shares to add more at 75. So buying between 75 and 95 is good, and you can do better than that, and this is what I've been doing with many stocks recently. You can buy the dip, and if you don't want to take profits early because you think one day things can go better, fair enough, but things will not get better before June. So you can sell some call options on June. For example, on PayPal, let me just show you how much you can cash in by doing that. You sell the call options that you're gonna, you choose the strike at the resistance level, because you know that it's unlikely we break out above this resistance given the strong move down. So you can go to the 125 strike, for example. And of course, don't sell call options before buying puts, but I'm showing you, if you buy 100 shares at, let's say, 95, all right? I like to sell twice the shares I buy. So, you know, I'm overselling on purpose because I don't think the scenario is likely to happen. So on PayPal, you go to the 125 call and you sell, if you buy 100 shares, you sell 2 call options, okay? And let's see. Okay, so basically you can cash in for every 100 shares bought, you can cash in $10 US, all right? So $1,000 US that you're gonna receive on your account until June, which is basically making the same P&L as if you bought your shares 10 points lower. So if you get your shares at 95, it's the same as getting it at 85. You follow me? So here, let me show you the P&L of the strategy, because I think we're in a type of environment where investors will buy the dip and sell the rip. So you don't want to, I mean, we should not expect a big rally happening on the global market, I think, this year. All right, sorry for being a little bit conservative about that, but we are, as you guys know, in a situation that is not nice, and you know, maybe things will go better. Maybe Putin will become a nice guy and leave Ukraine, and things will go better, and you know, inflation will drop, maybe, but maybe not. So let's be prepared for everything. And I think that selling calls, if you buy the dip, because let's be honest, there are many nice opportunities this day, and myself, I want to buy, you know, a lot of, you know, stocks that seem undervalued, but fair enough. I bought some BABA when it was dropping, but I sold some call options right away. I mean, I waited a little bit, and on the first resistance, I sold the next resistance call option, which cashed in for me $1,000 US in my BABA position. And I did that with many stocks, and it's a good strategy to make. I'm showing you how it looks. So if you do that, for example, with PayPal, okay? So this is the kind of money you can make. So I remind you, we sell 100 shares. So let's say we buy now, because I use call options that are different price. Okay, or we say we buy it lower, and I will just drop the volatility, the price action here. Okay, 10%. So Okay, so if PayPal loses 15%, then we are at 95. So the call option is much cheaper. So then maybe we would go to another one. But let's still keep this example. And so basically you buy 100 shares at 95, and ideally you need to wait a little bit before selling your call option, but let's say you do it right away. So you're gonna save only $2.5 per 100 shares bought, which is not that much because the volatility is only 45. You can see here, the volatility is extremely low. I know I didn't have the, okay, because the realized volatility is 67, but the volatility used by option market makers is at 45. So here it's good to buy call options actually. So, but whatever, I'm just showing you the strategy. But here I wouldn't do it because the volatility is very low. And basically you're gonna so start losing money below 92, and you can make up to $3,000 if PayPal closes at 125, which is where you make the most money. And then you're gonna slowly start to lose the money you made, and you're only gonna lose money on this strategy if PayPal goes above 160. So 160, guys, is around here. I don't think it can happen before June, okay? Maybe later, but right now the bearish momentum is very strong, and I don't see any reason, unless there is a news, that bears let it go. And I would personally here, you know, be seller between 125 and 170. If I was working on, you know, this market and selling stocks, I would definitely sell PayPal above 125. Okay, so I'm done with PayPal. All right, guys. So what is Gabriel trading today? We have a question.
Today, not much. I mean, pretty quiet. I'm losing basically the money I made yesterday. So yesterday I made 25k.
Okay.
Today I'm losing 19.
Okay. So what, on oil, I guess? Remind us quickly your position, because maybe the viewers right now are not the same as yesterday. So what is your position, just in directional, because you have a lot of spreads, we know.
Well, it's mainly this is basically in directionally gonna be mainly this gold versus silver.
Okay.
Which today is not going in my direction, but actually is good because I'm adding up.
Okay, so his position is once again long silver, short gold, because as we've seen together before, gold is ahead of silver. Gold is trading with a premium compared to silver, exactly like GME is trading with a premium compared to AMC. So whenever you have something like this with very correlated instruments, like AMC GME or gold silver, or we can find many like that, a good strategy is to take the spread position, because ultimately the spread usually comes back to what it should be. Okay, sorry, I'll let you continue.
This I also have like just silver long position.
Okay.
And because today like all the precious are being smashed.
What is silver doing?
Is not doing well.
Okay.
And I opened the position on palladium on the pullback.
Okay.
But it actually went further down. So for now I'm losing on my new position on palladium.
Okay.
But palladium is very risky, so I would not advise.
Okay, to trade some palladium.
To trade some palladium, just like you need to know what you're doing.
Okay. So basically, Gabriel is long silver, short gold, long palladium, long oil, right?
Yes, the oil is, it is up now, but I would say it's flattish because it was kind of down at the beginning of the day. Now it's up, so not something,
yeah,
you know,
1% up.
Tremendous.
Yeah, I agree. Okay, so a quiet day, losing 20k on a quiet day. Yeah, guys. Sometimes really, it's, you know, you need to have solid nerves, because this is a quiet day and he's losing 20k. So sometimes it can go much lower than that, but of course most of the time it's like plus 50k, plus 16k, plus 60k. Sometimes he's doing 150k in one day. So the purpose is to reach $5 million, if I remember well.
Yeah, maybe not this year, but
maybe not this year, guys. So yeah, when Gabriel will be at $5 million, guys, it's gonna be a good victory. Yeah, big party here, guys. All of you invited for sure, but we're not there yet. and let's see what's gonna happen. I'm happy to be here. You know, he's showing to me all the different strategies that he likes to do. I'm showing him like what I like to do. You know, we exchange, and yeah, it's very interesting. So let's see what's gonna happen in the future. But I like what I see here.
I mean, on the other side, something completely apart.
Yeah.
So I'm losing 20k, I mean 19k there, but I'm making 8k on arbitrage of crypto.
Yeah, yes, indeed. Because as you know, we are starting some NFT crypto bulls that are going to be based on actually what Gabriel is doing, and he's basically making an arbitrage on the platforms for different cryptocurrencies. And this night, overnight, he made $8,000 by doing nothing. His boat is just running, and he managed to buy and sell for a big notional. Can I say the notional?
I mean 250k.
Okay, I don't say the cryptocurrency because this is a secret.
You need to multiply by 2. So it's $500,000 because
so
it's 250k on the section.
So he traded $500,000 of cryptocurrency overnight. I mean, his bot traded for him, and he locked in 8k of P&L. And we're gonna do that with all the NFT. We're gonna have all the crypto bulls NFT holders. We're gonna use the money to run this arbitrage if we can, because there are some issues with the SEC. And if we can, and then we're gonna give this money to the NFT holders or use it for some events or whatever. We're gonna do something big with that, and this is the reason why we call that the crypto bulls, guys.
Just one thing, because 8k compared to $500,000 may look like small, but it's not like I have $500,000 on the account. I have much less. But first is risk free.
Mm-hmm.
I buy, sell,
Mm-hmm.
and I transfer.
Mm-hmm.
So it's like the notional is actually 20k of notional.
Okay.
But with 20k, I did so many rounds.
Okay, so with 20k you made 8k.
Yes.
But you traded 500 million.
Yes. No, 500k, not 500 million.
Yeah, 500k. Yeah. So with 20k you traded 500k.
Because but there's so many back and forth.
Yeah.
That's basically overall is making 8k.
Okay.
It's not really overnight. It's more like on a 12-hour time frame.
Okay.
But because at sometimes the arbitrage was so high, like 10%.
10%. Okay.
At some time.
So you see, this is the type of the type of profit you can make if you do crypto arbitrage. Sometimes you have 10% difference in the price of the same cryptocurrency across the platforms. But of course, manually, you cannot do that and all the night doing that. So you need to use some bots, you need to know how to do that. And Gabriel knows how to do it. So thank you very much, bro, for sharing that. So
no worries.
Yeah, so what are you checking today? Yeah, no, checking the spreads, checking. Are you gonna take some trades or?
Nothing much. It's the weekend, and then when you say I've been going to the pool. I mean, at this point, I don't really have nothing. I don't really want to add position right now because we were kind of in a kind of bull phase recently. So now I'm just
waiting for some correction, maybe to add more.
Yeah.
Okay. So you see, Gabriel is basically doing the same thing as we do on AMC and GME. He made some money on the way up. Now he's thinking maybe a pullback is gonna happen. So as you can see right now, we dropped a little bit, guys, on AMC and GME. Still up during the day, but we had this bullish bearish divergence. We still had the increase in volume, but mixed signals. The bearish divergence is winning for now. So yeah, let's see what's gonna happen, guys. I'm gonna cancel my order for now. That is at 140 because we went to the target, and after we reached the target, it's not a good buying order anymore. We should have gone, lower first, then higher. Then I would be happy. Now that we reached 160, I don't want to buy anymore. I prefer to wait for a nice opportunity to happen. Okay, so I'm gonna have a look at Gabriel Pro Arb. Exactly, man. You guys are funny. Yeah. It's indeed a lot of pressure, and you need to have good nerves, like I said, guys, to handle this kind of P&L and positions. So let me quickly go back in your questions. Many questions today. Thank you so much, guys, and hit that like button once again, guys. It's important for the channel, and thank you very much for asking that many questions. I'm sorry I cannot answer everyone. but it's good to see that you are interested. It's good to see that you are here learning things, enjoying this. So do you think Chinese stocks like JD, Baba or Baidu are about to dump? Okay, so I'm not gonna do technical analysis about those tech, Chinese tech, but I can tell you one thing is that I bought Baba, you know, on the dip. I took this risk because I mean it could have dumped more, but I would have kept it on the long run. So my cash would have been a bit stuck in there. Right now we have a Chinese government that said they would support the market, which means that they will directly buy shares unofficially, because of course they are not allowed to do that. But you know, the People Bank of China, which is the Chinese central bank, they do that. Okay, they will not say it, but they buy shares on the market. Japan, at least, they have the courage to say they buy their ETF. China is just saying we're going to support the market, but whatever. The news is that they're going to support the market, but still you need to know, guys, that China is not happy with what is happening with all this big tech, Chinese tech. Why? Because they have too much power. A company like Alibaba has so much information about citizens, because you know they are doing many businesses. They are, you know, and they are basically you know, retrieving and keeping records of transactions, you know, they have some social medias as well. And the Chinese government is just seeing that those companies become extremely strong, a little bit like in the US, Facebook, Google, but China is not the United States, right? And even in the United States, the regulators are trying to control a little bit that, but in China it's not that trying, it's that they put you down. And they clearly made it clear when they told Jack Ma, who is the owner, I mean the CEO and creator of Alibaba, billionaire, Chinese billionaire, and they clearly put pressure on him and his family. His family is not allowed to leave China if he does, so they're always going to keep you as, you know, hostage somehow, even if of course you're not in a jail or whatever. And they don't hesitate to threaten you, threaten your family if you don't comply to the rules. And they clearly you know, made it clear with Jack Ma that disappeared for a few months. We don't know if he was kidnapped or just asked to stay home. He will not say what happened. He's doing good now. We see him again. But they clearly told him that he needs to be quiet and to respect the rules and to do what the Chinese government is telling him to do, which is complying with the rules. And basically China is not happy with Alibaba having that much power, with JD having that much power, with all these Chinese techs. So, you know, Tencent most likely as well. So they're actually quite happy to see the value dropping. So right now they're going to sustain the market, but the fundamental issues, which are that China doesn't want these tech companies to grow too big, is still here and is not going to leave. So we have this, we have the US capital outflows that happen because of the trade war between China and the US, and we don't know how China is going to be positioned regarding the conflict with Russia. So we don't know if the US sanctions will not be bigger next year. So we have China that is against its tech companies, US that is putting sanctions that impact China. So, you know, that's not very bullish. We also have the COVID crisis that is expanding again in China, in Hong Kong as well. So I don't think we're gonna have a big rally coming this year. I still bought some Baba shares and I'm happy to keep it, but like I said, I'm selling some calls. I sold some 130 June calls, and I'm gonna roll this short call position later. If we drop, I'm gonna sell a lower strike, because I don't think we are able to revisit the highs. Just like for PayPal, guys, I told you that whenever we have some fundamental reasons to believe a company value has dropped, you know, for good reasons, then there's not going to be a strong bounce back unless we have some good news. So maybe China is going to announce that right now they want, you know, Alibaba to be extremely powerful, but seriously I doubt it. Maybe US sanctions are going to be lower. Seriously I doubt it too. So I think we have at least a year, 6 months, where the Chinese market is not going to drop more, because once again China is going to buy shares right now. So there is a floor. We know the floor is roughly where it was Alibaba, but we could very well get back to there, and it would be another good opportunity to buy, not call options once again, because I don't think we're going to go very high, but buy shares, sell calls. All right, so this is my view about the Chinese techs. I hope I answered the question well. So are about to dump. I don't think they can dump much more. I think we can revisit the lows though, but it's gonna, I don't think it can go much lower. Of course, only my view. Okay. Seems like SPY headed to max pain levels today. It should be around 445 levels. I don't think we go to 445. We have no. I think it's going to be a boring day for SPY. You know, even triple Q using 1% is not a lot. I don't think much is going to happen here. I think we're just going to go to maybe 446. Like I said, my view, guys, is that we grind higher for the coming week, 2 weeks, then correct, and then let's see what happens. But I don't see. I don't think we're going to drop heavily next week. I think it's going to be a bit like, you know, lower volatility, lower volume, just, you know, the calm coming back, and hopefully not before the storm. Let's see, guys. Okay. So yeah, 445. Yeah, 445 is possible. Sorry. 445 is very possible to close the day there. Why not? Why not? Cost is tiny. Okay, Brandon. Not sure what you mean, but you mean the price is good, I guess. What is cost doing? We said maybe we're gonna set up a trade there, but the setup was not perfect. Yeah. It's tempting to buy, it's tempting, but like once again, I'm not in a rush. Bitcoin is correcting a bit. You see, if Bitcoin comes back to 43,000, it could be a good level to buy. Yesterday we set up an order on Bito. So let's see if we are getting close to this levels. Maybe we're gonna do this again. Okay, and come on, guys, we're almost at 100 likes. Give me this thumb up. I'm using COS headphones now. They're good, so you see, okay, they're good things. It's pretty nice. Okay, so let's quickly have a look at Amc and Gme, guys, because this is why we're here for. Then I'm gonna take back your questions, of course. So bam, Gme. Okay, we're just dropping a little bit, but as you can see, so let's go in the 30 minutes time frame. You see right now it's a bit too late to set up an order here. Okay, first you don't want to buy a moving average that is flattening. Okay, just like here, I remind you guys, we set up a bullish trade around here, I think, but the 20-day moving average was going higher. We wanted to buy this morning around this level, around 140. We missed the trade because I was too slow, my bad. But right now we don't want to be using that anymore to buy, because you don't want to buy, once again, using a moving average that is flattening, because the stop loss, usually you place it just below and then it's not going up with time, so the risk is not tightening, which is the right environment that you want to be trading in. So here, you know, and a moving average that is flattening is the sign of bulls, you know, losing strength as well. So it's not bullish on the short term. Okay, we can very well close at 160 today, but we won't go above that, I think. Let's see. I think that the second wave is going to start next week, and once again go to the 130 area. That would be a very nice area to buy on GME. I had a question about AMC, I think, as well. I forgot. GME has a gap at 95. You think we can fall there the next days? No, it seems too far. Bulls are too strong. I mean, we cannot fall there just here. You mean 95? Okay, but it's a little gap. No, where do you see a gap? Here. Yeah, but it's, I don't know, is it really a gap? Bam, bam, bam. Yeah, it's very little. I don't think we can go there. No, not now. Maybe later. Hopefully not, but not right now. Bulls are too strong. As you can see, we completed the 1, 2, 3, 4, 5. So the worst case scenario right now. Of course, you know, there's no guarantee about anything, but you know, 130 is the 38.2% fib ratio. In a bull run, we don't go below the 61.8%. So between 110 and 130, to me, is the worst case scenario for now. And then we're probably gonna get back to the 130, 160 area later if we drop that much. If we drop only to 130, we're gonna get back there by next week. So we're gonna be here to buy at 130, of course, if we see this level. Okay. All right, guys, so it's almost 3 hours I'm here. Good luck, Gabriel. Yes, thank you, bro. Andrew is king. Thanks, brother. I'm glad you like this, guys. And by the way, do not hesitate to follow us on the Crypto Bull Discord, guys. Help us grow. It's gonna be good for the community, good for all of you guys if you're interested to get some Crypto Bulls NFT. Of course, you guys from the Discord, you're gonna access the private sale, which is even before the pre-sale, guys. So we're gonna make something special for you. So all of you guys who are into NFTs, join us, and we're gonna make it worth for you, trust me. Okay, and hit that like button. Yeah, 100 likes, that's good. Yeah, the gap at 125, this one we can fill it. That's possible. We need to see where the moving averages will come. We're gonna see. Okay, Bitcoin play. So Bitcoin, like I said, we have a breakout with that volume, so it can very well fade, but it's still interesting to take to enter between 42 and 43 roughly, and stop loss, you know, around. It's hard to use a stop loss here, but it's better. So stop loss around, you know, 40. I don't know. There's not a nice area to set up a stop loss, but let's say stop loss around 41. So, you know, this could be a potential trade, but it's not a very high probability successful trade because we didn't have the volume during the breakout. If we push higher, go to 46,000 on high volume, then get rejected, it would be much easier to set up a successful trade. Okay, guys, so what else? All right, okay, I do one more. Jamie, do you still think Jamie to 800? Yes, guys, I still believe. I mean, I need to refresh my target. It's too early to say, but if we start to squeeze, I will once again use the same techniques I used before. So I would measure, you know, the first waves and try to predict what is going to be the price of the next one. For now, we're having a first impulsive wave, so it's a good start. But we need more data to really give precise targets. I can still use what happened last year, but as you guys know, the more recent past is the more important in terms of levels, in terms of probability of success if you have targets. So let's wait, but the area 800, 135 is of course still in the menu. Okay, so bam, bam, bam. You're welcome, brother. All right, I do one more. Okay, I do Sophie and then I see you tomorrow, guys. So Sophie, pam, pam, pam. Okay, so dropping. I'm checking the volume, dropping on low volume. So even the strong moves happen on low volume. So this is the first signs that maybe bears are out of steam, and that maybe a reversal is gonna happen soon. So we then need to look for reversal signs. So here I'm having a trend line that can do like that. So Sophie, I would say anything below 11 is for now not strong enough, and we don't have any consolidation yet, so we have time. There is no rush to do anything here. Buying the dip seems risky because we are in we're making new lows, so there is no reason. There is a rebound, bears in control, they can push the price action much lower if they want. So I wouldn't buy the dip, I would wait for some bullish signals. Okay guys, so, and just last question about AMC, I'm happy to answer it. Can you take another look at AMC to see where it's going down today? Okay. So like I said, it's hard to say, but we didn't have the fifth wave here. So I can use fibs on what happened already and use the ratios to find some first targets. So it's giving me 18.95, which is in line with the 18.7 level. We're not gonna go there today, I think, but it's a nice area to add more shares next week if we see these levels around 18.7, 19. Then another method I can use is using some moving averages, but like I said, I don't have any moving average that is acting very well as support or resistance on AMC. So maybe the 50 on the 30 minutes time frame, which is right now giving us a reaction at 20. We are right now at the nice support level, guys. All right, let's be clear. But we have weakness coming from the volume, less momentum. So, I mean, it's just not the best environment to buy. I bought before the third wave because when you are before the strong move up, you can expect a strong move up to happen. Once it has happened, you can expect one more move, but usually less stronger. So just in terms of risk reward, it's not the best day to buy AMC today. On the long run is different. I'm here talking about today or next week. I think it's better to wait for next week. Even buying sometimes higher, but with a higher probability of success is better. So it's not only about I want to buy as low as possible, because by doing that you can just buy something that is dropping and that never comes back. So I prefer to buy whenever I have good patterns. Oh right, and then 18.7. Yeah, so this is what I can say. Alright, thank you very much guys for watching. For those who didn't press the like button, do it now before going. And the weekend is coming, so I'm gonna enjoy my time here. Maybe I'm gonna do a video during the weekend if I have some time, but most likely you're gonna see me back on Monday, guys. So have a very good weekend. Thank you again for watching and stay close to shore, of course. See you guys.